Can you guys hear me okay? I always worry in the beginning. Yep. Good morning. Good morning. Luciano, Dr. P, Mike M. Wells, Luciano, good to see you guys. How's everyone doing today? Good morning, PFI. All right, quick question. How many people? Let's see, how many people do we have in here? We got 21 people in here. Guys, who went through their trades from yesterday? Hey, good morning, Miraboy. Who went through their trades from yesterday and said, this was awesome, and this is what I'm going to do today? And who looked at their trades from yesterday and said, man, this didn't help me out. Maybe I should avoid it today. PFI, you didn't? That's too bad because PFI, if you would have taken 5 minutes this morning, what would you have realized? You would have realized that termination conditions take your money, right? And you would have realized that when everything says up, you should stay in a trade. So don't skip that part, guys. That's an important part. Do your review every morning. I did it yesterday, and I did it today, and I'll probably do it tomorrow. You are too busy trying to do what you're trying to learn. You got burned twice. Do you think yesterday's lessons would have helped? Just curious. Just curious. Maybe. Definitely. All right, guys. So let's get this class going. I'm excited about today. I really get excited about every day, to be honest with you. I think it's amazing that we have an opportunity to get together to talk about rules, to talk about advantages, to get you guys into a place where you start to get comfortable, right? Where you start doing the same thing over and over and over because what you know without question is that what you are doing over and over and over has been proven to bring you success. That the patterns that you trade have been proven through back testing, through study, through simulation to win more than they lose. And because of that, they're a part of your plan. So we're going to spend this first part of the morning talking about advantages. We're going to talk about a plan. And hopefully we're going to put you guys on the right track. Um, but before we do that, we're going to go to forexfactory.com. I posted in the room earlier, guys, there was big red flag news going on at 8:30, and if you watch the market, it bounced, jumped, spiked, it did all those things that we expect news to do. Um, and then when it settled down, it became tradable, right? So knowing when the news is keeps you from getting run over, keeps you from jumping into that freight train of emotion. Nothing going on until 10 a.m. At 10 a.m., business inventories, NAHB, housing market index. And these are low impact, guys. These aren't expected to have a big impact on the news, but it's important to know that they're there just in case things go sideways. So that's part of my routine each and every morning. And then I have the broken record duty to remind you that if you really want to be successful, hey, good morning, Jay Zoller. If you really want to be a trader ASAP, if you really want to get to that goal that you set for yourself, that you told, maybe you told Mark Dean or Chris or Cameron, hey, I want to be a professional day trader. Um, Here's how to get there. And it's up to you whether or not you decide to follow it. It starts by posting in the room, guys. Every chance you get, post in the room, just like everybody's doing right now. Post your pictures, post your wins, post your losses, post your questions. But this is an interactive room. This room isn't designed to be a lecture. This room is designed to be a conversation. And the conversation is going to revolve around what you put in the room, what you ask in the room. So if you guys aren't asking questions, room gets a little boring, right? So make sure that you're posting everything that you do in the room. And then the second half of it is use your spreadsheet. We talked about that for a second at the beginning. Every time you take a trade, it should go into this spreadsheet. And it's not going in there because I've created some arduous work for you. Oh my gosh, I want to make $1 million a year, but I don't want to type 3 words on a chart. I don't want to type 4 words into a spreadsheet, right? Sounds ridiculous when you say it like that. Guys, this spreadsheet is going to be your path to success. Everything that you do, you're going to put into your spreadsheet. You're going to put in how you felt, what the conditions were, and what was happening. And then what you need to do, and we talked about this morning, is come back to it, right? Don't just do the work. Don't just phone it in. Oh, yeah, I used a checklist. Oh, yeah, I used a spreadsheet. Guys, go back and look at it. What did you do? What worked? What didn't work? What brought you success? What made you nervous? What kept you relaxed? Answer those questions every morning. Go back and study every morning. And what you're going to find is that you're in the right state of mind for the day, that you are in a position each and every morning where you're like, okay, I'm ready to do this and I'm ready to follow my rules and I'm ready to focus on a plan because this is what worked and this is what didn't, guys. So use that spreadsheet, and then the second page of your spreadsheet, every time you follow your rules, put a picture in there. Remember what it looks like. As you begin to work on management, go back and re-annotate your charts. Talk about what you saw. Talk about the management side of things. When you begin to recognize those patterns, maybe it's that gap theory, right? Maybe it is pivot stop outs at a fib, whatever it is. Good morning, T. When you begin to recognize these patterns, start taking pictures of them. Get them into your spreadsheet, guys. Come back and study these things all the time. Termination conditions, right? Large triggers full bar away. A lot of you guys are getting caught on these lately. Make sure that you're taking pictures of these patterns so that you can create an awareness in the market, because the pattern repeats itself. The market repeats itself every day. It does the same darn thing every day. It goes up, it goes down, it reacts to Fibonacci, it has momentum, it doesn't. Guys, what we're doing in this first hour is we're going to recognize the advantages from the patterns that the market creates, and we're going to turn those advantages into trades. So post your trades, use the spreadsheet. Remember that recognition comes from repetition, doing the same thing, doing it correctly over and over and over. We're going to take this first hour, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. And we're going to talk about this as a high probability trend trade. We're going to talk about this as a trade that typically wins 70 to 80% of the time. We're going to talk about these Fibonacci rules, these trigger line rules, and your foundational trade, the trade that's going to give you the one skill that nobody can ever take from you guys, because once you're good at it, you just continue to get better at it, and that's chart reading. This high probability trend trade, this trade when every indicator on each of your charts agrees for the trade, this is the trade that's going to teach you how to read your indicators. It's going to teach you how to read your charts. And you're going to be able to open up a workspace and look at it, and in a matter of seconds, you're going to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. You're going to use these likely to continue areas for entries for that highest probability trend trade, getting into the market at the best spot so that you can reduce risk, so that you can maximize profit potential. You are going to understand where the market is likely to go, and this is going to allow you to have intelligent targets, to use Fibonacci as an area to pull profits, and to not hope that the market continues in the direction. And then finally, you'll understand where the market is likely to stop. And not only is this going to keep you from trading into these Fibonacci areas, it's going to keep you from taking these losses into fibs, into one-to-ones, into divergence highs when that market is likely to reverse. It's also going to create an anchor, and it's that anchor comes from these likely to stop areas, from these termination conditions. And when you find a high probability trend trade that sets up after a termination condition on your large chart, guys, this is the trade that typically wins 70 to 80% of the time. This is the trade that is going to give you the confidence through the memory of success. This is the trade that's going to teach you to read your charts, and this should be your foundation. This should be your first 30 days. This should be what you're doing, focusing on the best of the best entries for that first 30 days. You're going to simulate your trades daily. You're going to remove the risk of loss by using a simulator, by participating in class. You're going to post your pictures in class, every one of them, especially the losers, because the losers are where you're going to learn the most. We want you practicing the correct trades. We want you practicing following rules, because when you get lucky in the market, when you jump in, when you fight things that have been proven statistically to not work more than they do work, but you get lucky, you start repeating that habit. So we want you to not have that muscle memory, to focus on the correct rules, and then post in the room so that you know that you have the correct rules. We're going to simplify today. We simplify every day. And so many of you fight me on this, guys. We're going to focus on one trade in the first hour. the high probability trend trade, where every indicator on every chart agrees for the trade. And guys, this is your bread and butter. This is the one that sets you up for long-term success. We will add what we call a medium probability trade to the mix before the day is out. And a medium probability trade is a trade where most of your indicators line up for a trade. However, a small issue exists. That small issue is going to be recognized through your chart reading. And your chart reading comes from your study on the high probability trend trade. You're going to be able to recognize problem areas through your chart reading. You're going to be able to take quick profits through your chart reading. You're going to be able to get through to a zero loss level on your chart reading. So we can't put the cart before the horse, guys. We need to focus for 20 days. High probability trend trades, the absolute best of the best. And then we're going to focus on this medium probability trade that's going to come in. Absolutely. PFI, are you a golfer, or did you play baseball, or did you play basketball? What was your sport as a kid? All of it, of course. Makes sense. So, did you ever go to the batting cages? Okay. So if you went and spent 30 minutes in the batting cages, it's probably going to make you a better hitter. Wouldn't you agree? You're a better offensive player through that practice? Of course. So what if PFI you turn that hour into 2 hours every day? Don't you suppose that that would make you up? It's not about redoing the same trades. What it is, PFI, is when you are on market replay, you have the ability to hit pause. You have the ability to stop the market in its tracks and make sure that your rules are actually met. And I know what most people are doing is they're trying to remember what the market has done so that they can trade, so that they can inflate their egos, so that that P&L goes up. But the reality, PFI, is market replay allows you to fix your mistakes. And if you're fixing your mistakes, then you're following your rules. And it shows you what the potential of following your plan really is. Market replay isn't designed to make the most money. Market replay is designed to show you what happens when you follow your plan. So many people use it. They're like, I remember this. The market dropped 30 points. I'm just going to go short arbitrarily and get all that pretend money, and then I'm going to have all these pretend friends and a pretend Corvette and a pretend mansion. But when I start trading live, it's not going to do a damn thing for me, right? So market replay lets you fix your mistakes. It lets you trade your plan, and it shows you the potential of the plan. And it's an excellent tool because what it does is it doubles and triples your repetition, which just gets you closer to your goal because recognition comes from doing the same thing over and over and over. Um, and Paul, I know that it's true because that's what I did. I used to do market replay. I'm like, oh, I traded 100 lot and I made $1 million and I'm so damn smart. And then I went live and I lost everything because I don't have any idea. So PFI, it's like going back and replaying that Little League Championship game, but now you know exactly what the pitcher's going to throw, right? But you still have to swing the bat. So get those reps in. Simplify, guys. We're going to do the high probability and then we're going to go into the medium probability. But you have to learn the looks so that they're easy. You have to know what you're looking for so that it becomes easy, so that your analysis takes a matter of seconds, guys. You should be able to look at your charts and in 10 seconds know exactly what it is. Either that or Paul, go back. So if I trade today and let's say I make $1,000, but if I missed 5 trades because I wasn't sure about my rules, I might have been able to make $2,500, right? And then I begin to see that potential for when I can do my analysis rapidly. But what I've got is the ability to pause, to stop for just a second, to look at my checklist, to look at my rules, to make sure that they're actually met. And then I'm not missing the trades that I skipped. I'm not skipping the trades that I talked myself out of, and I'm not taking the trades that I talked myself into, right? So even if you've seen the day, if you focus on the rules, when you go back and you do that replay, it's going to help you out a lot. And then taking pictures of those correct trades. Once again, guys, we talk about pictures a lot. Filling up your personal trade setup looks, your absolute best of the best looks. I've hidden the other 250 on a third tab because it was just getting a little busy. But guys, I'm telling you, this is a proven path to getting to where you want to be. Good morning, Jose Trades. And repeat this process every day. Keep flooding my room with pictures. until you're sure you're always taking the correct rules, because the correct rules have to be proven to win more than they lose. The correct rules have to give you a statistical advantage. Otherwise, they have absolutely no business being in your rules. And then once you can win, guys, go to that prop firm. Don't ever spend all your money like we used to in the old days, right? Go to a prop firm, test your plan, and see what you can do. So I'm going to share this with you. This plan has been proven for 20 years, guys, and everybody fights it because everybody is so darn smart. It's up to you whether or not you want to follow it, whether you want to fight it. We're going to talk about a high probability trend trade, guys. We're going to talk about three simple rules, three rules that are recognizable within your first week with Nexgen, but then need to be practiced so they're committed to memory. Three rules that provide three advantages, and those three advantages are the recipe for a trade. Those three advantages are why you're going to pull the trigger to get into the market. And those advantages are momentum, a clear path, and an entry area. And these three rules, guys, they happen on only two charts. But Mark, I saw this. But Mark, I saw that. Guys, two charts. Your large chart is the large opinion of the market. Your large chart is what the guys that move the market are making happen. Your large chart is going to define direction, the trend of the market. Your large chart is going to define momentum. Your large chart is going to define all the areas that you need to pay attention to, be worried about, or stay away from. It's a broad stroke of a brush, guys. It's a bigger, slower moving chart, but it gives the general temperature of the market. It lets me know exactly what the large crowd is thinking. And once I understand what the large crowd is thinking, and once I can embrace the idea that this large chart leads the way, my first two rules are going to happen on that chart. And I will have the advantage of momentum, and I will have the advantage of a clear path. I have absolutely nothing in my way. And when those are present on this chart, well, then I'm going to go and I'm going to hope that there's somebody willing to fight that large crowd. I'm going to hope that there's somebody willing to take profits, even though the trend is up and the momentum is up. And we're gonna use a small chart to refine that broad stroke of a brush, to take 1 bar's worth of information, break it down into 15 to 30 bars on a smaller, faster chart, and it's gonna pinpoint our entry, guys, that point where the market is likely to continue. And by using this small chart to refine the large chart, you'll be able to reduce risk, you'll be able to increase your profit potential. And rule number 3 of 3 is getting you into the market at that point where it's likely to continue. So once again, that large crowd is going to define the momentum. It's going to define the direction. It's going to define the areas that we're looking for. The small chart is going to give us this little fluctuation in price that allows us to enter the market, that allows us to take advantage of everything that the large chart is doing. And I'm going to do this one just for Ron. I'm going to share this picture. Being an individual day trader, being a day trader is about knowing your place in, um, is knowing your place in the market. There's two types of people in the market, guys. There are the people with all the money that move the markets. There are the people that create the trends, that create the momentum. They're the people that react to Fibonacci, right? And you're going to see that a lot today. These are the big money investors. These are the sharks. Next gen users, we're going to teach you to be a remora. We're going to let the shark go on a feeding frenzy, but you're still going to eat. We're going to let the shark create the momentum. We're going to let the shark establish the direction. We're going to let the shark do all of the hard work. And then we're going to take advantage of it on this two chart system. We're going to take advantage of it. When they make all of this happen, guys, we're going to be a remora. We're going to jump in and we're going to get fed. And there is enough there for us to have a very comfortable living. So I want you guys to embrace the fact that if you spend 20 days figuring out how to get into the market, learning the rules for the high probability trend trade, learning how to have the advantage of momentum, a clear path, and an entry area, and doing it on only two charts, you're going to give yourself the path to success, the foundation that you need to be successful. So we're going to talk about it. The first rule says that your large chart must have strong trigger lines, meaning that your large chart is going to set the tone. It's going to get everything in place before we ever look at a small chart for a potential entry. In your large chart, the first thing it's going to do is it's going to define trend, guys. If the background on your large chart is green, you're only looking for rules to be met for high probability trend trades long. The sharks have decided that the market's going up and we're going to go with the flow. If the background is red, we're in a downtrend. We're only looking for rules to be met for high probability trend trades short. The deep pockets investors, the institutional traders, the guys that control the market have told us that they want the market to go down. This is the first advantage that you give yourself. And you guys that have been trading for a while, I want you to ask yourself, if I never fought the trend, how many mistakes would it eliminate? Guys, it eliminated quite a few for me in my trading. Hopefully it does the same for you. Once we have direction, rule number one says we must have strong trigger lines. And strong trigger lines are defined as when your small trigger lines, these solid lines, break away from and above your large trigger lines. Both should be wide. Both should be angled in the direction of the trend. And it's the separation between the small and the large that lets me know that the odds are favorable for the market to continue up. You're going to hear in classroom quite a bit, odds favorable momentum. Did you have odds favorable momentum? This is the look that we're talking about. This is the look that you must commit to memory, and this should be what sets the tone for you looking for a high probability trend trade. From the point of separation to the point where they return, this separation, this odds favorable momentum is the most favorable look for buying on that smaller chart, Fibonacci support, for continuation with the trend. And in a downtrend, small's below the large are wide, they're angled in the direction of the trend. When I have this separation, when I have this odds favorable momentum, this is the most favorable look for selling a pullback to Fibonacci resistance on that smaller, faster chart. From the point of separation until they return, this is your opportunity, guys. This is your best of the best. Because when the small triggers work their way back inside of the large triggers, you're losing momentum. We're weakening the large triggers. And when you have weak triggers, anything can happen up or down. So rule number one is the easiest rule that you're ever going to learn, guys. Separation, like scissors open, ready to cut, means that the momentum is in place. It means that that advantage is present. And then when those scissors close, when the smalls return to the large, that advantage goes away. Um, and if we go just to the live market, right, I'm going to open up the NASDAQ because there's going to be a million opportunities here. And I'm only going to put trigger lines on there. I'm going to load in just 2 trigger lines. And when I do that, I want you to see smalls are outside of the large. There's one of those potential tails, and look how the market continues up. Smalls are outside of the large. There's one of those tails. Look at how the market continues up. Here we have a little indifference. This may be a medium probability scenario. But if I scroll back, you're going to see that odds favorable momentum over and over. You're going to see that continuation with that momentum over and over. And then when those trigger lines weaken, look how it is the precursor to a potential reversal in the market. Triggers come back, little fluctuation, ultimately it reverses. Even in a downtrend, it starts with those weak triggers. So guys, do me a favor. Oh, look at that, weakening triggers, and look how that bar is starting to come down. Live, right in front of you. It's amazing, but these patterns repeat themselves over and over. So do me a favor, give me a Y in the room if you're with me. Odds favorable momentum is going to lead the way. Odds favorable momentum should set the tone for everything that you do. And when you have that momentum, when there's nothing in the way, when you are sitting on the hood of a semi going down the highway at 100 miles an hour, we're going to make sure that there's nothing in the way, that there's no brick walls to run into. And this is what we call termination conditions, guys. These are those areas that are likely to stop the market, that may stop the market. And termination conditions must be false. We must have room to the profit targets. Remember that termination conditions happen on the large chart. So we're going to go to the large chart. It works, doesn't it, Ty? Just came to me one morning. I have 2 good analogies a year. That was one of them. Termination conditions are Fibonacci-based indicators that may reverse the market, guys. And that word may is underlined and it's a different color Because that termination condition, you have to wait. When it happens, it's either going to reverse the market or it's going to break, and those are the two options. But our goal as traders is to never get caught up when the sharks are making those decisions. These areas can be blue Fibonacci support or red Fibonacci resistance. They can be yellow one-to-ones. Let's get it visual. They can also be this divergence high line, which is magenta, or this divergence low line, which is cyan. Guys, divergence for you new users means that there was a loss of momentum in the market. When the market comes up and comes back down, if this magenta line prints, we know that momentum didn't follow the price. When the market goes down and then heads back up, if this cyan line prints, we know that momentum is not following the price, that momentum is waning in the market. And when price comes back to these areas, it can be a very powerful indication that the market may be reversing. So let's take a look at these areas and let's talk about how we recognize them to be a termination condition. And it's really an easy recipe. Um, the first thing that has to happen is that your price bars must reach that area, whether it's Fibonacci support, resistance, yellow one-to-ones, divergence highs, divergence lows. I want you guys to write this down on a piece of paper. The first thing that has to happen to recognize the termination condition is price reaches the area. Those dynamic Renko bars come down to Fibonacci support. That's the first step. The only other step in the equation, guys, the only other thing that you have to do is ask yourself, where are my triggers? And that was the worst spelling ever for you to make fun of it. When price reaches support, where are my triggers? If they remain above the area of support, support may stop the market. Support may create a bounce that is untradeable. Support may reverse the market. This is a termination condition, and guys, this is where Nexgen users are able to sit on their hands, to wait, to give it just a minute to decide. Is it going to reverse or is it going to break? Those are the only two options. There's no reason for a Nexgen user to ever get caught trading into termination conditions, to ever have the market bounce against them, because you have this simple recipe. Price reaches. If the triggers don't break, no trade. The path isn't clear. Well, when is the path clear, right? Because we want to take trades when both your small triggers and your large triggers make it to the other side of the area. We consider that area to be broken. You'll see that Fibonacci support begins to act as resistance, or Fibonacci resistance begins to act as support. But when both lines of each trigger, the small and the large, clear support, it behaves as resistance. The path is now clear. You'll notice that I have odds favorable momentum, and now I have a clear path, and price retraces that most favorable look for selling Fibonacci resistance, and it ultimately continues right down to the next Fibonacci area. Guys, it's only a two-part process. Price reaches the area, the triggers remain below at a high. Here's one of those pivots with a loss of momentum. Not a termination condition. This is just a pivot with a loss of momentum. When price reaches the divergence high, all of the trigger lines remain below. Now we have a termination condition. Now we have an area that may reverse the market. Price reaches Fibonacci resistance. The trigger lines remain below. Even with odds favorable momentum, we now have a termination condition at a high. Same thing off one-to-ones. Guys, this is the easiest recipe in the world. It's either going to break or it's going to hold. These are examples of it holding, at least for the moment. If this termination condition at a high creates a full reversal, if no trigger lines break through that area, we're going to call it a strong top. And the look is exactly the same at a low, and the recipe is exactly the same at a low. If price reaches a low and none of the trigger lines break, look at all of the indecision, guys. This is your giant red flag. Don't get caught in the mess. You've reached an area that may reverse the market. If the termination condition from the low does actually create a reversal, if it does give you odds favorable momentum and a clear path, there's one of those tails. That's that highest probability trend trade that you can take. We're going to call this a strong bottom. And just to reinforce the divergence low rule, this is just a pivot with a loss of momentum, absolutely not a termination condition. But when price reaches the line, the triggers remain above. Now it's a termination condition to low. Now it's what we call that pivot stop out of a divergence low, pivot stop out of a divergence high. So guys, that's your recipe for recognizing a termination condition. If the triggers reach the area, if price reaches the area and the triggers don't break, no more trades. Sit on your hands for a moment. You don't have a clear path. If both the small and the large get to the other side of the area is considered broken. Support begins to act as resistance. Resistance begins to act as support. And now we're looking for that high probability trend trade. We're looking for that odds favorable momentum coupled with the clear path. And that's when we're going to look to buy or sell that Fibonacci support or resistance on a smaller, faster chart. I told you that we're going to talk about a medium probability scenario. And guys, this is it right here. This is your introduction to a medium probability scenario. When your small triggers break through an area with odds favorable momentum, the strongest trigger look that you could ever imagine, the scissors as wide as they could possibly be. This area has the potential to break, but it's not broken yet. It is not a clear path. Rule number 2 is not met. It cannot be a high probability scenario. The first medium probability trade that most of you are going to work into your trading is what we call the 50-50 trade. And a 50-50 trade, guys, isn't your chance of success. It isn't the odds of winning. It isn't anything more than a description of your trigger lines in comparison to the area. 50% of your trigger lines have broken through the area. 50% have not. 50-50. Pretty clever, right? Call it a straddle trade. Call it a one above, a one below trade. I don't care what you call it, but understand that the path isn't broken, or the area isn't broken. The path is not clear. Rule number 2 hasn't been met, which means that you're not taking that highest probability trend trade. And we're going to talk about how to gauge when that area has the best potential to break, because you'll see there's a 50-50 right there, and the market reverses, right? And then here's a 50-50, and the market continues through. Something on your smaller, faster chart lets you know that you had the advantage. Something on your larger chart lets you know that you had the advantage. And we're going to talk about that. But first, we're going to focus on the best of the best. We're going to focus on that highest probability scenario. Divergence lets us know the market is slowing. When divergence is retested, price reaches it, triggers remain above. We have a pivot stop out of a prior divergence line. This is a termination condition, and if it creates a full reversal, large triggers go from red to green, smalls end up above the large, the path is clear. Guys, this is a strong bottom. This is a great precursor for that highest probability trend trade. When that pivot stop out of divergence high coincides with Fibonacci, this one's for you, PFI, it adds strength to the top. It adds power to the top. A pivot stop out of the divergence high is a great termination condition. When it coincides with Fibonacci, it becomes even better. It's not necessarily a stronger top or a level 2 top or a double secret probation top. It's still just a termination condition, but now technically it's 2 termination conditions, or 2 levels of Fibonacci. It's 3 termination conditions in the exact same area. And if this termination creates a full reversal, gives me odds favorable, provides a clear path, there's that little tail, there's that potential highest probability trade coming from what we call a strong top. One more, price reaches, triggers remain above. No more short trades into this area, guys, and a lot of new users are tempted to take this trade, but look at the reaction to Fibonacci. Look at that full reversal bar, a couple bars up on that larger, faster chart. Notice that the trigger lines never get up above that resistance, and it bounces a little bit, guys. This is buyers and sellers fighting it out, trying to figure out who's going to win. Ultimately, we get the full reversal. It gives us odds favorable. There's one of those tails, one of those potential pullbacks. This termination creates a full reversal. It's a strong bottom. This full reversal gives me odds favorable momentum. That's my first rule. With this odds favorable momentum, all of my trigger lines are on the other side of resistance. It's beginning to act as support. Rule number 2 is met, and there's that potential pullback to get me into the market for my highest probability trend trade. 90% of what you do during the day is going to be waiting for the big people, for the rich people, for the market movers to give you this advantage. There's a lot of waiting. You're a professional waiter. The hardest thing you'll ever do is sit on your hands and do nothing until there's something to do. Sometimes the market turns and there's not a fib, guys. Sometimes there's odds favorable momentum and a clear path, and that market goes down for seemingly no reason. I'm going to give you one more termination condition, but before I do, I'd love a why in the room. Is everybody comfortable with the idea that if price reaches one of these Fibonacci areas and your triggers don't get to the other side, sit on your darn hands and do nothing? This is your safeguard. This is keeping you out of that reaction. And I'm telling you, this is the rule that I broke 1,000 times before it finally sunk through my thick skull. And I lost a lot of money trying to go short into these areas, trying to go long into these areas, when I should have been in the best of the best, taking profits at those areas. It did that an hour ago. Paul, it does it all the time. Watch this. There's your indecision. Support holds, the market goes up. Resistance holds, it pushes it down. Support holds, the market goes up. Guys, look at how often this happens. And you know it's going to happen because these fibs have been there forever. All you have to do is learn it and trust it. And Paul, what you're showing me here, and I want you to see this, is both your small and the large cleared the area, didn't it? At this point, support is broken and you have a clear path. Give me a Y if you see it, Paul. This is just a pivot with a loss of momentum. This actually isn't a termination condition because all of your trigger lines got through that area. But the market still turned. Was it overrun? It might have been, right? How do we recognize that? What a great segue, Paul. I owe you one for this. We can recognize that overrun with this simple little thing. On your smaller, faster chart, on your entry chart, this is the only termination condition that I'll look for. And it's 3 divergences in the same price range, 3 losses of momentum in the same price range. It may reverse the market. And it's very powerful when the third divergence has those anything can happen triggers. And you're going to see this look from a low at instances where that market overruns everything, right? But it still turns. You may see 3 divergences down here. You may see this look from a high when everything says the market's going up, but these 3 divergences push it lower. And it did happen on the NASDAQ this morning. John and I were walking. Just 3 divergences. So Jay Solar, great question. Watch this. And I'm going to type it out. 3 divergence. I'm just going to call it DIV in the same price range is a termination, all on its own. And then if we go 3 divergence in same range with weakened triggers, it's a stronger term. And then if we go 3 divergence in same range with higher, lower last divergence, stronger still. So just 3 says watch out. 3 with weak triggers says whoo, you better watch out. And 3 divergences with a higher final pivot than the low on the from a low, or a lower pivot from a high. This is a head and shoulders pattern, and this is one of those things even more so that kind of lets you know that things might be changing. Here's Paul showing an example on a large chart. Notice how there's a little bit of overrun and they lose momentum. And then it comes back to that Fibonacci level and they're unable to overrun it, and there's a second divergence. And then they come back to a Fibonacci level and look at the change in the triggers, and there's a third higher divergence. This happened over quite a while, but that's a large chart example of those three divergences, how they change and how you can see what's going on. And you're going to see this from a low or this from a high on a smaller, faster chart. Maybe when there's that little bit of overrun. Paul, there's your picture. And this was taken back in 2021, probably September, October. Same pattern. Same pattern. Pretty cool, right? What market was that, Paul, that you showed me? Those three divergences. It was crude. Check this out, guys. At 9:37, there's those three divergences, and there's your push up. There's those three divergences pushing up. And in a consolidated market, look how you get them from both sides. No reason to get caught in that consolidation, guys. You have this rule in place to give you an advantage. Let me go to my oil chart. Let's see if we can find it here. That's the S&P. So at 828, let's see if we get lucky on the lessons, guys. Tighten that up a little bit. At 828, 1, 2, 3 divergences. Notice how they're ascending. Pretty cool, right? There's one divergence and the triggers are already weakened. There's a higher divergence and the triggers have already rolled. And then there's a third higher divergence. And that was the precursor to this one holding and launching that market up, right? And then it moves up all the way to Fibonacci. It overruns. And then, gosh darn it, there's three divergences again. And there's that third lower and it pushes down. And then they come and retest it. And there's those multiple divergences in the same location one more time. And that was the precursor to the push down. No Fibonacci to support it, but your rules, 1, 2, 3, third lower, weak triggers. Straight out of the textbook, guys. Small chart can show you change that's happening on the large chart. And that's why we respect three divergences on the smaller, faster chart as a termination condition. Does that make sense to everybody? And here's the amazing part. As you guys begin to work on your management, let's say hypothetically you take the perfect trade and you're in a short position. If you see these three divergences, now you can read your charts and you can say it's time for me to get out of this trade with profits. It's time for me to take advantage of this small chart information and not get stopped out for a loser. So as you work on your management plan, guys, these three divergences are going to help you a lot. As you work your way into those 50-50 trades, those, whoops, my OBS just disconnected. All right, so I'm going to repost the rules. Large chart says that we have momentum through strong trigger lines. Large chart says that there's no termination conditions, that we haven't reached an area that may reverse the market. Give me a Y in the room, guys, if you're comfortable. The large chart's done. The large chart's done everything that we need it to do. And now what we have to do is we have to go to that smaller, faster chart. We have to refine that broad stroke of a brush. We have to pinpoint where the market is likely to continue so that we can take an entry for our highest probability trend trade. Remember we talked about the large crowd is going to establish everything for us, direction, momentum, areas. All we need now is for the small crowd to force a pullback. For that little group of people that are willing to fight momentum, that little group of people that are willing to fight the trend. And when everything says up, this is the look on that smaller, faster chart, guys. You should have strong triggers. Smalls should be outside of the large. And more importantly, you should have what we call favorable large triggers. And favorable large triggers are when the the large and the synthetic on your small chart are overlapping, one on top of the other. Has everybody noticed how you have two sets of large triggers on your small chart, new users? The smooth ones are the large triggers for your smaller, faster chart. The stepped ones, these are actually the large triggers from your large chart. And when they work together in harmony, symphonically, whatever you want to say, symbiotically, when they're one on top of the other, when they overlap, this is your best chance of success, guys. This is what we call favorable large triggers. And rule number 3, your entry rule, says that we're going to buy or sell a pullback, that small little retracement in price that the small crowd creates, and we're going to buy or sell a pullback at an area, Fibonacci support, yellow one-to-ones, mid bands, but they have to be inside of favorable large triggers. And the tighter these triggers are, the more they overlap, the less room there is for areas to be inside of them. The smaller your window of opportunity becomes, the greater chance you have to reduce your risk. And that is why we stick to these favorable large triggers, guys. So we're going to go through, everything says up. We need to wait for that small group to force the pullback. We need to wait for that reversal bar on the smaller, faster chart. And at the time of the reversal bar on the smaller, faster chart, you're going to create a window of opportunity. Ladies and gentlemen, this is what I want you to practice for 20 days. Window of opportunity. In a long trade, it's from your highest point of support to your lowest point of support inside of favorable large triggers. Not near the large triggers, not the large trigger themselves, but the areas of support inside of those favorable large triggers. Fibs, midbands, or yellow one-to-ones. This is where the market is most likely to continue. These large triggers are moving averages. And averages correct themselves. And that correction is where we're going to enter into the market, guys. As they come up, they're going to envelop any area that's a tick above them, that's 2 ticks above them. So from this mid-band to these yellow ones, this is where the market is most likely to bounce. Next-gen users, because of the momentum on the large chart, because of the clear path on the large chart, you are going to activate a limit order right at the top of this window. You're going to right-click on your chart, and you're going to wait for the market to come back to you. And there's only two things that are potentially going to happen. Either it's going to come back to that highest point of support inside of favorable large triggers, or if it's a short trade, from that lowest point of resistance inside of favorable large triggers, your order goes right at the end of this big yellow arrow, guys, and you're going to be in a long trade if it comes back. And you're going to be in that long trade because you have the advantage of momentum dictated by the large chart, because you have the advantage of a clear path, once again dictated by that large chart. And because you have the advantage of entering the market at the area where it is most likely to continue, that is dictated by that smaller chart, that smaller, faster chart. You're in this trade. It's 79.21 with all of those advantages. The market is pulled back, and you're there. Every trade you take, and this is harder for new users, I want you to expect it to go to the bottom of that window. I want you to just say to yourself, I'm getting in at the top because I don't want to miss it, but I fully expect it to run my butt over down to the bottom of that window. It's likely to happen. It can happen. It might happen, right? So you're not going to panic if this trade goes against you a couple ticks. You're going to sit on your hands and you're going to keep reminding yourself that my large chart said I had momentum in the direction of the trade, that my large chart said I had nothing in the way, and my small chart is nothing more than an entry chart. Anything that wins 70 to 80% of the time, ladies and gentlemen, is mathematically obligated to lose 20 to 30% of the time. My buddy Janesh, who's been trading with Nexgen forever, says 20 to 30% of the time the market is going to be wrong. 20 to 30% of the time it's going to go beyond that window of opportunity. We're going to sit there with a protective stop. We're going to manage our risk, guys, and we're going to put a stop just outside of that window to that point where the market shouldn't go. If it exceeds the window of opportunity, it's going to smack into our stop. It's going to take us out of the market, and we're just going to dust off and say next. We're going to wait for that next best opportunity. Is everybody comfortable with this? This is your entry. First, at the time of the reversal bar, from the top of the triggers to the bottom of the triggers, that's where we're looking for areas. But our actual window of opportunity extends from the highest point of the support to the lowest point of the support. This is where the market is most likely to continue. If it doesn't reach your entry and you panic jump in because of a fluctuation on a smaller chart, you've increased your risk. But even worse, you've decreased your profit potential, right? If you jump in here in the middle of nowhere, hoping that the market doesn't go without you, your stop still has to go where the market shouldn't go. Your profit potential is reduced greatly. Guys, this is a trade that I want you to study for 20 days. This is an entry that I want you to study for 20 days. I want you to go back and find all of the entries. I want you to practice it real time. This is a trade that I will never miss. This is the top of my trading plan. This is my best chance of success every time I enter the market. And 70 to 80% of the time, this is my outcome. Profit target reached. Because I waited for the pullback, my risk is minimized. Because I waited for the pullback, my profit potential is maximized. So Jay Solar, when I talk about the highest and lowest point of support, great question. Let's look at nothing other than the window of opportunity. Let me get everything off of this, and let's go through it. I'm trying to drag my screen. There we go. High probability trend trades come from an area. Is everybody comfortable with that? It may originate at a mid-band, Fibonacci support, or Fibonacci resistance. So I also know that those areas need to be inside of favorable large triggers. So it's a two-part process on this one. First, I'm deciding where are my trigger lines, right? Are they wide? Are they angled in the direction of the trend? So Jay Solar, when I talk about my highest and lowest point of support, the highest point of support is going to be that mid-band inside of favorable large triggers. The lowest point of support, the lowest area where that trade may originate from, is the one-to-ones at the bottom of those triggers. So my window of opportunity extends from this mid-band to these one-to-ones. And then, of course, the opposite is true for a short trade, guys. From the lowest point of resistance to the highest point of resistance inside of those favorable large triggers. That's a great question. Guys, this is your trade. These are your rules. It's only 3 rules. It's only 2 charts. Now you just have to practice. You have to study. One of the great things about about the software is your software goes back historically 10 days. You have 10 days worth of information right there at your disposal. And you can scroll back 10 days every day. You can go back and do this drill to increase recognition. If you, on your large chart, have odds favorable momentum. If you, on your large chart, have no termination conditions, and you see one of those bars with a tail, remember this is that pullback on the smaller, faster chart, circle the tail. Don't even look at your small chart, just circle the tail. And if that tail lines up for a long trade with an area of support inside of favorable large triggers, well, then you have a high probability trend trade. This is your best of the best look, guys. Save this picture. This is what's going to get you into the market. Your goal for 20 days is to be able to recognize this point of support inside of favorable large triggers. We don't trade tails. We don't take entries from the large chart. We use that refinement process. Because one bar on your large chart, notice that I put a black box around it, becomes all of these bars on a smaller, faster chart. That's how we're able to refine it. That's how we're able to get in at resistance inside of favorable large triggers. Morning, Debbie. This is how we're able to reduce our risk. This is how we're able to maximize our profit potential. So once again, let's go back. And let's look at just what's happening in the moment. And guys, I want you to see this. Smalls below the large are wide, they're angled in the direction of the trend. Everything says down. The smalls have broken through the areas, but the large have not. There's a pullback directly to resistance inside of favorable large triggers, and the market continues down. I'm looking at CL right now, right? It's a 50-50 with divergence. So Jay Solar, a lot of you in the beginning won't ever take this trade because we don't have that clear path because it's a 50-50. And we have two losses of momentum. So the brand new user probably won't take this trade, isn't going to forfeit momentum, isn't going to forfeit a clear path. As you grow with the software, there's no doubt in my mind this will become a trade for you. Right now we have odds favorable momentum. The smalls are below the large are wide, they're angled in the direction of the trend. I've already got two divergences. My window of opportunity extends from 34 to 42, which means that I'm looking at approximately 10 ticks of risk. Why no path okay for me, PFI? Because my experience recognizes patterns, because I've got 3 years of patterns and 9,000 pictures under my belt. So what I recognize is that when everything says down, when things line up, when this is a trade I'm willing to take. Because I recognize that two divergences may push higher, and I'm looking at my higher point, but my trading has nothing to do with you. As the brand new user, and you're absolutely right, price hasn't reached the divergence low, but my trigger lines haven't cleared the other. Guys, this isn't your best of the best look, but even when it's not the best of the best look, look at how price pulls back to resistance inside of favorable large triggers. I love it when you experienced users try to find every reason, and it's awesome. So let's find one that's easier, right? Crude oil doesn't give as many opportunities, but when they're there, they're amazing. So I want to do this, guys. I want to remove the burden. I want to remove the burden of areas from you. And I only want to look at trigger lines for a second. Odds favorable momentum, and there's a tail. I'm going to circle it. Guys, I'm just trying to teach you how to study right now. That's all I'm doing. When you have odds favorable momentum, circle a tail. When you have odds favorable momentum, circle a tail. That tail lines up with resistance inside of a trigger, but it's not favorable large triggers. A lot of you won't take that trade. It's just too soon in the move for the brand new user. But you're not worried about it, because if you took that perfect trade, it went from 84 to 90 before three divergences told you to get out. Your job, ladies and gentlemen, is to make every mistake you can make. But give me a Y in the room if you see it. Odds favorable. Remember I said momentum will cover mistakes, guys. Odds favorable momentum. There's that tail. The tail lines up with a pullback perfect to support inside of favorable large triggers. Great googly moogly. It's a wonderful trade. And if I scroll back and I circle another one, and I scroll back, and I look at these, guys, all I'm doing is learning how to enter the market. All I'm doing is learning how to become familiar with the pattern that repeats itself on every market, every day, all the time. And I'm training my brain to recognize this absolute best of the best look, so that when it happens, doesn't that look exactly like the last one? So that when it happens, I don't hesitate. I take that highest probability trend trade. This is how you study, guys. We're back into the other day now. And there's another example. And let's see what it looks like. And it pulls right back to the resistance inside of favorable large triggers. So this is a pattern that repeats itself every day, every market. Jay Solar, I hope by now that you know my thoughts on this, because I share them every day. But what I want to ask first, guys, is everybody comfortable? This is how you study. This is how you go back and you prove that I'm full of crap. This is how you go back and you do everything in your power to convince yourself that I'm telling you lies. Because if you do that, guys, if you take the time and you make it your mission to prove me wrong, what's going to happen is you're going to call your salesman tomorrow and you're going to say, damn it, I went through 90 days of information and this pattern repeats itself and it wins more than it loses. That's why there's green boxes next to a lot of your names, because you did the work, because you tested it, you back tested it. You didn't take my word for it. You did the work. Guys, doing the work is the difference between, it's the difference between success and floundering around. And I had a great talk with a guy about that yesterday. You should be able to look at this and within 10 seconds understand whether or not you have a trade, a rules-based trade. And if you can't do this analysis within 10 seconds, keep studying. You will be able to, I promise. But it takes a little bit of work and it takes a little bit of getting it done. And PFI with the BAM. Guys, my job isn't to make you professional traders. My job isn't to make you brave. My job isn't to give you anything other than the most solid foundation that I can provide. Give you the ability to recognize a trade that wins more than it loses. Give you the ability to understand that when you follow a plan, a proven plan, a back-tested plan that has been proven to win more than it loses, that you have the chance for success, and all you have to do is learn how to use it. I'm giving you the best elliptical that money can buy, but if you don't put yourself on it and start spinning it, you're not going to lose any weight. I'm giving you the best hammer, but if you don't learn how to swing it, you're not building a house. I'm giving you the absolute best software on the market, guys. Now you just have to learn to use it. I'll be with you every step of the day. Every step of the day. It's been fuzzy. Guys, is everyone else fuzzy or is it just Dr. P? And I just want to say Pepper at the end of that. You're probably a real doctor, and that I hope that's not insulting. Can you guys hear me okay? Dr. P, it may be on your end. Mark G is fuzzy. Shoot. It may be on my end. Let me disconnect and reconnect real quick, guys, and see if maybe that helps. Guys, if I'm ever fuzzy, tell me. All right, I just rebooted my iPods, or however you say them, AirPods. So half of you are good and half of you are bad, which leads me to believe that it may be on y'all's end. It may be an internet issue, um, something like that. But video is not. Oh, my video is fuzzy. Oh, a lot of the times that has to do with your computer and the size that you're looking at it, and you've got video good. I was good, now I'm bad, and it's bandwidth, and it's your market chugging a little bit. Video's good on some, video's not good on some. Right on. Tunnel voice. Debbie, I do that for effect. I always wanted to be a 70s rock star, so it may be. I love that everybody's got something different. All right, let me get back behind the pulpit real quick, guys. This checklist came to be, this simple one trade, how do I get into the highest probability trend trade checklist came to be because a gentleman called me one day and he said, Mark, I can't do this. Mark, I'm chasing trend trades. I'm chasing edge trades. I'm chasing momentum trades. I see John Novak do it in the room and I can't do what he does. I see Jay Solar doing it in the room and I can't do what he does. I see Ron and Finman and Paul and Moon and Vad and Aaron. I see all these people in the room taking these trades and I can't do what they do. And this is where I tell you guys, who gives a crap what everyone else is doing? Focus on you, right? So what I did is I said, let's try something crazy. Let's eliminate all the noise. Let's eliminate everything that's confusing you. Let's eliminate everything except the highest probability trend trade. Let's focus on getting in the market when every advantage is present, right? So we created this checklist. Is the market coming from a good top or bottom? Do you have odds favorable momentum? No termination conditions. And do you have an area inside of favorable large triggers? The language is very specific. Guys, I've never had anybody in the history of this checklist use it and follow it and do worse than 70%. And for those of you that are chasing everything, I want you to let that sink in. If you're not profitable with your trading yet, nobody in the history of this checklist has ever used this checklist and done worse than 70%, ever. I've never seen it done. If you do it, follow it to the letter, show me your trades, let me know. I'll change my statistics, but most people are hitting 80 to 90%. For those of you that are visual, here's that exact same checklist with pictures stolen from the resource material. Is the market coming from a good top or bottom? Here's that picture that we studied terminations creating a full reversal. Do I have odds favorable? There it is. There's termination conditions defined. And here's your window of opportunity going both directions with all of the annotations that I can give you. Look at it every morning. Tim, when you say which NASDAQ instrument am I using? It's just the NASDAQ futures. 923, is that the question? What month? There you go. 923 is the most current. Guys, NinjaTrader 8 will always update you to the most current. NinjaTrader 7, if you go to your instrument settings, it'll let you take a look at it. And guys, I'm going to tell you right now, NASDAQ's not for new traders. NASDAQ is not for new traders. NASDAQ is for people that can recognize their trades inside of 10 seconds. Odds favorable, no terminations, clear path, window of opportunity. Boom. That's as fast as it should happen. So, Jay Solar, let me ask you something. What's your goal as a trader? Ooh, that is fuzzy. To make money. Guys, give me just 1 second. I'm going to disconnect real quick and reconnect with the hopes that that video comes back through. Oh, you know what? Here we go. Let's see if I can re-up this. And let me see if I can change the setting to maybe help a little bit. All right, there's the new screen. Is that a little bit better? I'm hoping. Yeah? Okay, cool. Awesome. So Jay Solar, let's ask ourselves the next question. If your goal is to make money, does it matter if there's 2 hours in between trades? What if I only get 4 trade setups a day? And what if of those 4 trade setups, 1 loses? Right? And what if I only make $200 on each trade? So if I make $600 J Solar on the 3 trades, and I lose $150 on the losing trade, right? Where does that put me? $450? Of course, let me pick a rough math number. What if on those same trades, J Solar, hypothetically, and we're trading a 2 lot here, right? What if we're trading a 10 lot? Realistically, couldn't that $450 turn into $4,500? And what if we're only trading a 4 lot? And that $450 turns into $900 a day. And that $900 a day is $4,500 a week. And that $4,500 a week is $18,000 a month. And then this is where my math gets fuzzy, but that's a little bit below $250,000 a year. By being patient, by waiting for the absolute best of the best. And everybody thinks that they need more trades. Everybody thinks that they have to be in the market all the time. Guys, 90% of what you do during the day is waiting for advantages. 90% of what you do during the day is waiting the advantages. And traders get in trouble when they decide that every move is theirs. When traders get in trouble, when they go, well, the market went down and I didn't get paid, so I'm going to start breaking rules. I'm going to start looking for more trades. I'm going to start looking for opportunities to be active rather than opportunities to be profitable. Guys, your trades have to look the same all the time. Same trade every time. Same rules every time. Same looks every time. Terminations always have to be terminations. There's 3 divergences from a fib, right? Holy smokes, all the information is there. All we have to do is be patient and wait for the advantages. In Jay Solar, I know that it gets boring, right? And that's why we introduced the 50-50. But if you're winning 80% on high probability trend trades and you introduce the 50-50, your win percentage is probably going to drop 20 or 30% because it's not a high probability trade. It's the damn it, I'm bored trade, so I have to be in the market, otherwise I'm going to make stuff happen. So guys, that's why I created this. This is your simple trading plan because I know you guys aren't going to sit on your hands. You, Jay Solar, you point the perfect trades. Go back, circle the tails, and see what happened. Don't put the burden of your education, right? This is your job. And I'm not trying to be ugly. Your job, Jay Solar, is to open up your crude oil chart, to go back, to circle tails, and to see when those advantages were present. And if there weren't any, you have to be okay with that. Right? And that was a potential opportunity. And this was a potential opportunity. This had a clear path, but no odds favorable momentum. So it goes back to medium probability. And if I circle back, it pulls right back to resistance at large triggers. Yeah. Some days there's a million of them. Some days there's not, right? And every day is going to be different. In Jay Solar, that's why we incorporate the medium probability trade sometimes, right? That's why we talk about the medium probability trade. That's why I give you guys this simple plan. And the simple plan starts with never fighting direction or triggers, right? And guys, here's your first trade. Here's your best entries. Here's the one that you never miss. So Jay Solar, let that be the phrase. I will never miss a high probability trend trade. Fair enough? I will never miss the opportunity to have all of these advantages and enter the market. And if you're looking at crude oil and you're looking at the S&P and you only get 4 of these a day, that can be a great day. But because the average human can't sit on their hands that long, here's the 50-50 trade. So Jay Solar, what I've done is I've created your absolute best chance of success on a medium probability trade. And I've put it into this spreadsheet. And these are my thoughts on the 50-50. If one area is not broken, I'm comfortable with taking the trade as a brand new user. If I have odds favorable momentum on both my large and small chart, I'm comfortable looking for the next thing. And that is no divergence on the 5-1, guys. No loss of momentum on the 5-1. So I have to have strong triggers and no divergence. And I want it coming from a good top or bottom from a termination. So Jay Solar, you asked me what my thoughts are on the 50-50s. This, in my opinion, is your best chance of success. Notice that I go back to and I say no divergence a second time. Notice that when we talk about management, I say if divergence prints, exit a trade. So what do you think I'm passionate about in regards to a 50-50 to create your best chance of success, guys? A lack of divergence, no loss of momentum. Because we're relying on momentum to break the area. We're relying on momentum to push through. Here's a 50-50 trade. Smalls are through, large haven't quite made it. And there's a tail. Does it fit my rules? It doesn't because it has a divergence. But here's the question. As you grow with the education, as you grow with your ability to read charts, As you grow with your understanding of momentum, as you grow with knowing that when it comes from a termination that creates a full reversal, doesn't it make sense that your plan may ultimately change, that you may grow outside J Solar because you think they're only trading with divergence? If I take a 50-50 trade with divergence, let me show you what I see right now. Actually, this one's probably a bad example. Let me find a good example of a 50-50. Smalls, well, the smalls aren't through. So let me find an example of a 50-50 and let me show you what I think about when I go through it. Because you think it's only the divergence, right? Where's that circle? This is what I see. I see resistance that held strong, that created odds favorable momentum, right? I see that my large triggers and my small triggers are 98% of the way through this area, and there's momentum. So not only am I thinking that this area has the potential to break, but I'm saying to myself, it's real close to being broken. I'm noticing on this chart that my smalls are still outside, that my large triggers are already through the area, and that my synthetics are damn close, right? I also recognize that I have resistance backing me, that everything says down, that my small triggers are way far away, and that this is the one spot for a low risk entry to take this trade. J Solar, my chart reading is about looking for advantages. And you just said momentum is not strong. So here, guess what? Don't take the trade. That's it. Don't take the trade. Until your brain gets to the level of my brain, we can't take these trades the same way. Does that make sense? Until you and I think the same way. J Solar, I'm 3 years ahead of you. I'm 3 years ahead of you. I'm 9,000 pictures ahead of you. I am probably 1,000 market hours ahead of you, right? So your biggest advantage comes from recognizing that you're still relatively new. And when you see this look right here, J Solar, and you want to learn and you want to get better, I'm going to show you what I had to do. And maybe what I had to do will resonate with what you have to do. And if you had any idea how many times I tell my brother that's not my trade, and it aggravates him because he's 20 years ahead of me. This isn't my trade. Rules not met. That's the first thing that you have to do, right? Is say, this isn't my trade, the rules aren't met. But then the second thing that you have to do is you have to start pointing out all the reasons why this trade had a pretty good chance to become a winner. Recognizing that you have to manage, recognizing all the different advantages, right? So J Solar, it's a level, it's a path. Taking a million pictures, recognizing all of these patterns. Everybody wants to be done with the learning path. I want to be done learning in 3 months. I want to be done learning in 4 months. Guys, I'm 3 years in, I'm still learning. John Novak is 27 years in, and he still recognizes patterns that maybe he didn't recognize before. You will never stop learning. Which is why it's important to have a plan that is appropriate to your level of knowledge. Ooh, I'm going to coin that phrase. It's important to have a plan that is relative to your level of knowledge. Does that make sense to everybody? J Solar, if I take a 50-50 trade with divergence, don't worry about you needing to take it, and always do it. Ask me, Mark, why did you take that trade even though there was divergence? And I rarely share my trading with you guys unless it's a perfect trade. But I'll have the conversation. J Solar, these are all of the advantages from my chart reading that I recognize, and I'll share it with you, right? Absolutely. Guys, we're in kindergarten. This is your kindergarten plan. This is the one that allows you to eat non-toxic paste and survive to get to first grade. This is the one that keeps you focused on advantages. so that you can get to the next level. And what I have found, what Nexgen has found, is that if as a brand new user, you keep your entries mechanical, if you keep your management mechanical, methodical, you have a recipe for success. You have the ability to make money as a brand new user while your education grows. You have the ability to keep taking these perfect trades, these high probability trades, these every advantage present trades. And then as your education grows, J Solar, your entry conditions may change, right? You may add a momentum trade. You may add a high volume area trade. But if you don't have a solid foundation, how are you going to get to the next level? So PFI, you're absolutely right. You're brand new. It is a super advanced situation for you. For me, it's like looking at a watch and telling time, because I've studied 1,000 of them. So guys, I give you this trading plan not to shackle you, not to hold you back, but to give you the opportunity to find a level of success as a brand new user. I love high probability trend trades. I never miss a high probability trend trade. But the flip side of that, and guys, this is probably the most important thing that I can tell you right now. The flip side of that is saying to myself, this area isn't inside of favorable large triggers, therefore my rules aren't met, therefore I'm not taking the trade, right? As a brand new user, it's saying, here's 3 divergences in the same price range, the third one's higher, the triggers are weak. I'm not going to try that last attempt at a short, because this removes my advantage, right? And then you have to be okay with sitting on your hands and doing absolutely nothing. And you have to be okay with the idea that there wasn't a pullback. And you have to be okay with the idea that the market does not provide a statistical advantage each and every time you look at a chart. But if you wait for those advantages, you'll be absolutely amazed at what you're able to accomplish. All right, that was my preachy moment. I apologize for the preachy moment. Keep it simple, guys. Keep it simple, keep it simple, keep it simple. Make it so you can recognize one trade in a matter of seconds and then add your second trade. And then go through the exact same study process so that you can recognize that trade in a couple of seconds. And then if you feel like you want to add another trade, then J Solar, that's where conditions begin to change. But first recognize the best of the best. Embrace the best of the best. And then expand your plan. And guys, I'm going to be with you. When you break outside of high probability trend trades and you start looking for medium probability trend trades, I'm going to be with you to help make it easier. You're going to post pictures and you're going to get feedback. And then when you start taking these momentum trades, a lot of you have done it. And let me tell you, you guys did a fantastic job of butchering the lessons taught. I'm going to be here to help keep you on the right side of things, to give you that encouragement, to show you where maybe the mistake was made, what you did well, so that you can get better every time. The key is keep it simple first, get good at it first, do market replay. Everyone wants to make money in the first month, guys. I want to be freaking brilliant. I want my recognition to be top notch in the first month. And I want to practice consistency in the first month. And I want to recognize entries in the first month. And I want to use a pragmatic approach to management in the first month, because I know that I'm not going to be in the first month forever, guys. Eventually, I'm going to be in the second month, and I'm going to be a lot smarter than I was in the first month. And by the third month, I'm going to impress myself with the patterns that I recognize. And by the fourth month, I'm going to continue that path. But the more you give yourself to think about in the first month, the more you try to catch in the first month, the more decisions you try to make in the first month, the longer it's going to take you to do well in the second month, the longer it's going to take you to get to where you want to be, because you're spreading yourself too thin. Keep it focused. Trust me on this. I've seen 1 million people do it. Keep it focused. If you think you understand a lesson, take a picture of the lesson. Guys, this termination condition created a reaction in the market. This termination condition isn't guaranteed to reverse the market, but it created an untradeable bounce. Do you see it? And then the sellers pushed back right to the termination condition. But now my smalls are above my large. Now my trend is up. I'm not going short here, but it's still too soon to go long. Give me a Y if you're with me on this little analysis. It's too soon to go long, and it's too soon to go short. So guys, what's my option? If I can't go long and I can't go short, what can I do? Wait. And how much money does it cost me to wait? Not a damn penny, guys. Some of you decided that even though your synthetic's down and your large were up, that even though you had divergence against it, some of you decided to go long right here because you said, well, that's going to be my trade. That's going to be, there it is. And you said, I'm going to go long right here because of this termination and these triggers. And that's cool. And then the large triggers are still down. This takes an awful lot to manage. And it doesn't fit any rules. So I'm encouraging you, fit your rules. There's a bad bottom. So Jay Solar, let's go through the process. There's a bad bottom, and it reaches resistance on a 50-50. Can the rest of you hear me? Give me a Y if you can hear me, please. Okay. It's Gary. So I'm going to take a picture real quick. And Jay Solar, I'm going to kind of show you the next level. And guys, this is great, right? Let me pull up that 50-50 checklist. Whoops. And I'm going to do this. Make it a little smaller. And I'm going to take a picture of this checklist. And I'm going to take that picture of the 50-50 that I just took, and I'm going to put a checklist on it. So guys, I want you to go through and I want you to go through the checklist with me. And Jay Solar, this is why I created this the way that I did. Do I have odds favorable momentum on the 13-2? This is the first thing that I look for on the 50-50. Absolutely. Are my small triggers outside of the large triggers on my small chart? Absolutely. Do I have no divergence on my 5-1 chart? Absolutely. Am I coming from a good bottom? Am I coming from a termination that creates a full reversal? So Jay Solar, this is where most users will stop. They'll say, you know what, I'm not taking this trade. This isn't my best chance of success, right? But this is where a lot of users will say, but Mark, I have an area of support inside of favorable large triggers. So I'm going to make the choice to ignore the fact that my checklist wasn't met. And then Jay Solar, that's the initial, and that's why this checklist was built, because if you followed the checklist, you didn't lose any money. If you didn't follow the checklist, you got absolutely slaughtered. Does that make sense? So there's the first part of it. And this is how the checklist keeps you focused. And then Jay Solar, when I go through this, I want you to see what I do. And this is because I've got a lot of experience. This is because I've got repetitions and I recognize patterns. The pattern that I recognize is that when I blow through all these areas and this pivot doesn't come from a termination, I'm looking for that mid-band or resistance near it. And that's really kind of my target spot because I believe in Fibonacci. And then when I get a 50-50, man, Ron, I looked and 7 didn't even give me the option.
to do it. Let me finish this lesson. We'll go over that. So, Jay Solar, my next thought, and guys, this is for you, and this is why we learn to read charts and recognize patterns, is that if I'm not coming from a good bottom, my expectation, because of pattern recognition, is that this becomes my target area for continuation down. Overrun all of the fib areas, but the buyers push, and I get a 50-50 right at the mid-band, right at resistance. There's no way on God's green earth I'm taking this trade, because patterns tell me that it's likely to go down and retest the area. Does that make sense, Jay Solar? So when I begin to recognize these patterns instinctively, when I begin to recognize these patterns through repetition, it begins to change my approach a little bit. And then the flip side is if I have a fib right here, and I do have a termination that creates the full reversal, I'm saying that the market's already done what we expected to do. The market got to that key area. The market ricocheted off of it. The market is strong. Everything is good. And Jay Solar, I'll take this trade. And I'm okay losing it. I know it's a medium probability trade, but I'll take this trade because of the good bottom. And even more, I might take this trade if one divergence prints, because it's coming from a Fibonacci termination condition that created a full reversal and gave me absolutely amazing momentum. But this is very much experience, right? This is recognition of patterns. So until you have that recognition, until you're comfortable with those patterns, I'm providing you an option to keep yourself out of harm's way as you develop recognition. Guys, that's what this is for. This isn't to shackle you to one trade. This isn't telling you that you can't be successful with a bunch of other trades. This is saying keep it focused and give yourself the best chance of success while you gain that knowledge, while you get those repetitions. Does that make sense, Jay Solar? Does that help a little bit? A lot of times we feel like if we don't get it all right now, then we're being held back a little bit. But the reality is I'm putting training wheels on your bicycle right now so you don't bleed so much from skinned knees that you give up that bicycle altogether. Has anyone ever done that? You try something new and you're so horrible at it in the first couple tries that you just stop. And you don't embrace the idea that you're allowed to be new, and you don't embrace the idea that you're a student. It is a lot to process, Jay Solar, and that's why we start with a foundational approach. So check this out. It takes 2 years to get behind. So Jay Solar, your first thing to do is to never fight the large chart directions or triggers. That's your first goal. Every time is to make sure that you're consistent with this. Your second goal is to recognize the entry for the high probability trend trade. So when you're great at recognizing direction and momentum, you're going to be able to take advantage of that. And of course, the subset on that is that your first 30 days is recognizing these conditions to where it happens almost instantaneously. And it doesn't matter what's going on below. Absolutely nothing below that entry means a darn thing to anybody until you can do this. And Jay Solar, you can do this. You're fantastic at this, right? And then once we get this entry, once we get this absolute best of the best entry, well, then we're going to learn to manage it. Because we have to do something with that great entry. And guys, management should be just as pragmatic as your entry. Management should be just as mechanical as your entry. So I've put that pragmatic mechanical management into the simple plan for consistency. You've proven that you can get in at the best spot. Guys, we've worked together over it for the last 20 days, and you're taking beautiful entries on high probability trend trades. Your stop goes outside of the window of opportunity because of the great entry. And guys, you're really taking 30 days to develop trust in the system and trust in the methodology. And you're taking 30 days to understand that 8 out of 10 of your trades are going to hit this stop, that 8 out of 10 are going to be losers. But you're so focused on the advantages being present that you actually become okay with the idea that you're going to lose trades. It's the weirdest thing, but it does happen. So there's nothing for you to do from this great entry except either get stopped out or get a reversal bar. We play the if-then game. If I get a reversal bar, then I reduce my risk. If-then. Not hope, not opinion, not emotion, nothing. Just if-then. And then at this point, there's nothing to do. I'm either stopped out for a small loser. Thank you, reversal bar, for reducing my losses, which are a normal part of a positive equity curve. Or my first target is hit. And Jay Solar, we've made that first target almost impossible to not hit with a high probability trend trade because it's only $100. And if you hit that $100, that's your money. It's in your account. They can't take that away from you. Guys, is there anyone else that feels like an absolute rock star champion, good dopamine, serotonin, holy smokes, this is awesome, I just made money on a trade? I do. Every time I win, I still get excited about winning trades. And what this does is this gets me excited about the idea of collecting that money and keeping it. Whoops. And then I move my stop to break even. So now I've got money in the bank and I have absolutely no risk. If my target is hit, then I'll reduce all of my risk. And because I have that big kick of happy, I'm okay learning to trust my large chart. I'm okay learning to trust that momentum, learning to trust that clear path. And that's exactly what I'm doing when I'm holding on for that second target. I'm learning how to trust my large chart. My second target's only $200 away, guys, which means on a 2-lot, on a high probability trend trade with the most mechanical, pragmatic approach, I'm either going to make $100 because it hit me break even on the second contract, or $300 because it hit the second target, and then I'm going to get the hell out of the market, and I'm going to wait for it to set up the next high probability trend trade. And for those of you that don't think you can make a happy living on $300 a day, that's $1,500 a week, guys. That's $6,000 a month. That's $72,000 a year on a 2-lot, high probability trend trade, 1 full winner, or 3 break evens. And then you take this great trade and you take this solid foundation, guys. And some of you will choose to never go beyond it. And you'll say, you know what, Mark? I'm going to take that $72,000, but I'm going to do it on a 10-lot. And I'm going to make $750,000 this year. Or I'm going to do it on a 100-lot, right? Or I'm going to do it on a 1,000-lot eventually because I'm compounding from the absolute best to the best. And the one thing that successful traders have in common, ladies and gentlemen, is that they don't take 1,000 different trades. They take the best trades and they manage their money through compounding. So Jay Solar, your goal initially, and not just Jay Solar, this is for everybody, is first we learn that we can't fight triggers and direction. And then we learn how to enter the market, right? And then we learn how to manage that great entry. And we get so good at this that this entire process takes 10 seconds. It takes 10 seconds. Did I just get booted? I sure did. All right. Usually you guys can still hear me when I get booted. If you can, never fear. I'm on my way back. Man, it hasn't done this in a while. Got kicked out of the cord. On my way, guys. Can you guys still hear me, though? It's always funny. For whatever reason, like it sends me to the great beyond, but you guys can hear me. All right, we're back. All right, so I've learned how to enter the market. I've learned how to manage that high probability trend trade. And then this is where the average user goes, this is awesome, and this takes absolutely zero effort. I can identify this entry in seconds. I can manage it very methodically. I'm ready for more. So guys, after this one, You say, I'm ready to work on that 50-50 trade. I'm ready to add the 50-50 trade. And it's going to take you another 30 days to work on your entries, right? But most of you are going to say, I'm good at a high probability trend trade, so I should automatically be good at a 50-50 trade. So I'm going to take it and I'm going to manage it like a high probability trend trade. But a medium probability trade has to be managed assertively. PFI will attest to this. You have to be able to read your charts quickly to manage a trade that's 50-50. You have to be able to read your charts quickly to recognize these trouble spots, to get to zero, to take quick profits. So guys, this is what you're doing. In J Solar, everybody's going to get there at a different time. Everybody's going to reach where they want to be at a different time. And then after that 50-50 and you get good at it, then maybe you add momentum trades. Maybe you add an HVA trade. Maybe you start looking at edge trades. Maybe you start moving outside of that 50-50 comfort zone. But if you're trying to catch all of these before you can do any of this, you're shooting yourself in the foot. You will get there, I promise. I've never met anybody that followed the path, that stuck to the plan, that didn't get exactly where they want to be. It's never happened, not in my history. The only people that don't get to where they wanted to be are the people that have to be at the finish line before they ever lace up. So there's a path, guys. That's a pretty easy path for you. I hope that makes sense. And I hope that it's encouraging and not discouraging. So let's kick ass and take names, right? Let's learn how to find the best of the best. And let's be a little patient. Let's respect termination conditions. There's a termination condition that created a full reversal. There's a full reversal that's giving me odds favorable momentum. There's odds favorable momentum that got me into the mid-band inside of favorable large triggers. There's my acceptable risk below the reversal bar. But there's that risk being hit. Guys, why do you suppose my stop got hit? And I want you to see this. Do you think it had anything to do at all with price getting to these one-to-ones and the trigger lines below them? And that's exactly what's going to happen, is we're going to misunderstand a couple lessons every now and then, right? We're going to make mistakes. In the moment, we're going to think we have the perfect read, but in the reality, we're still trying to figure out that read. We're still trying to get it down, to make it second nature, to get it correct inside a couple seconds. Guys, we're going to get there together. All you have to do is post your pictures in class, record them in a spreadsheet so that you can study them each and every morning. Learn your rules so you can be consistent. I've given you every tool you need to do that. Simulate your trades and get those pictures in class, practicing the right rules, getting feedback on everything that you do. Simple, and move forward. Guys, that was the longest first hour ever. I hope it was informative. We're going to get into the second hour. We're going to start looking at the live market. We're going to do all this stuff and looking at the charts that you guys posted. True story, I say the same thing every day. I try to say it differently now and then just so that you guys can really kind of let it click. But I'm going to take a quick break, guys. I'm going to stretch my legs and breathe through my eyelids and do all those things that calm me down and make me happy. Post your pictures. I'm going to start scrolling back, looking through pictures that you guys have posted. If you have a question, ask your question. I'm going to leave you with crude oil right now. Man, they missed our entry by a couple ticks, didn't they? Take this picture, guys. Circle where the market where a rules-based entry was. Show me it. Circle the tail, take the picture, write your rules on the chart, post it in the room. I'll be back in 5 minutes. All right, guys, I am back. Nice job, Moon. I'm going to take a look at it in just a few minutes. He did, Gary. It's up above there just a little bit. All right, y'all. I'm going to scroll up to the top. Let's look at the pictures. What we had going on today. Scrolling up, almost to the start. Let's see where we're at. Wow, you guys have had a lot to say today. I like it. All right, Safia got us going with one of those momentum style trades. Guys, Moon, you'll recognize this one. Safia says when everything says down, when everything is strong, when everything is crazy going in the direction of the trade, she's going to look for a momentum style trade. Wait for that little fluctuation. And then really just keep going until, I don't know why you got out. But there's that loss of momentum right after. Safia, great job. Clear path. Everything says down. Well done. Ron says, if Safia can do it. Once again, guys, this is just chart reading. Super strong triggers. Clear path. Not looking for home runs. Same trade every time. Every time he gets in. Odds favorable. Clear path. All right, PFI, odds favorable momentum, 50-50 trade. Bought the pullback to support. Inside of favorable arch triggers. No. PFI, let me jump down so I can see your comments on this one because this is great. This is one of the things that I want you to realize. PFI, let's go through. Let me take a picture. Good. And you did a great job annotating. You really did. But since we have this on here, let's do it. Do we have odds favorable momentum on the 13-2? Yes. Right here. Perfect. Do we have odds favorable momentum on the small chart? Yes. Perfect. No divergence. Once again, 3 for 3. We are at a termination condition, a pivot stop out that creates a full reversal. We even have a great bottom. Your job, PFI, was to enter at the area. Do you know what happened here? The market was wrong. PFI, you took the perfect trade. You had every advantage on a medium probability trade. Were you trying to figure out what you messed up? Right? So technically not a good bottom tells me that we need to talk about tops and bottoms. Technically not a good bottom lets me know that what you need is a quick reminder what is a great top or bottom so that you can go through that. And a great top or bottom is a termination condition that creates a full reversal. Whether it's a pivot stop out or whether it's a fib, this is how we define a strong top or bottom. So PFI, any remorse about that trade that you had, I want you to change it into celebration because you took it perfectly. The conditions were awesome. Every advantage was there. You just lost a trade. Tape up, play hurt, man. Let's get the next one. Great job on that. Great job on that. And then divergence prints. But you decided that you were right and the market was wrong. And they said, you know what? I'm going to go ahead and beat you a second time. You take the perfect trade, it doesn't work. This is where you just have to say to yourself, man, it's just getting worse. Why on earth am I taking that trade? Bobby T. No, it wasn't. It was a 50-50 with divergence, right? It just got worse. Check it out. Let's look. Large triggers never made it through, man. They just never did. And then look at where your small triggers are. They're below everything, right? Your synthetics have been running flat for a while. Nothing's angled up. Crazy weak momentum. Smalls inside. Trend has changed. divergence prints, and it's a 50-50 that's just failing. Make sense? Awesome. Great job, though. Bobby says there's a termination that creates a full reversal. Betting on momentum through the termination, so he takes one of those little pullbacks. First target off at the trouble spot. Bobby perfect. But guys, strong triggers break things. Look at all the momentum. And Bobby takes it up right to that key area. Bobby, this is picture perfect. Everything about this is beautiful execution. Being aware of the problem, taking some profits, not risking it, and then letting that momentum from a termination condition push the market up. Picture perfect, Bobby. Notice that it starts with a good bottom, that it starts with a strong bottom. It starts with that termination condition that creates a full reversal. That's what instills confidence in those bigger moves. Absolutely amazing. Coming through. All right, T, we got one for you here. Rule number 1 met. Rule number 2 met. All right, so T, I can't see your entry. That was your entry right there on the pullback to support. It's a little unorthodox because you're in a downtrend. The smalls are below. Rule number 1 is definitely not met at the time of entry. But what you're doing is, once again, you're taking that pattern. When price reverses from nowhere, we're looking for that mid-band or some form of support. When the large triggers don't follow, there's 3 divergences in the same place. You took the perfect pullback right there to Fibonacci support and exited at Fibonacci resistance. And T, I don't think you could have done this any better. This is a continuation of a trend that had to sort itself out. And by letting the smalls get up strong and the large get up strong, you let that little nonsense and you waited for the advantage. And I don't think you could have traded that any better than you did. Great work. Great trade. All right. Let's see, where am I at? All right, here we go. It's the Jay Solar Show. So Jay, we're going to go through them. $50-50 with odds favorable momentum, no divergence. First entry is way too low. Second entry was perfect. Taking quick profits at the small triggers. Jay Solar fits the checklist perfect, doesn't it? Beautiful. Next trade. I'm going to look at comments in a minute. Nope, we're going to look at comments right now. Jay Solar, in order to have a 50-50 trade, small triggers have to break through the area. Small triggers have to get through that area of resistance. And they have to get through aggressively. Does that make sense? And this may be one of those instances where it printed. No, it had already printed. It had already gotten there. And then divergence kind of gets it. So you're trading directly into a termination condition is what you're doing here. Okay. That's okay. Yeah. So that's what I was saying. That may have printed right in the moment. You might have missed it. But divergence should have kept you out. Great recognition after the fact. And I like that you took a second to type on there. Oh, man. There was that divergence. I probably shouldn't have been in this trade. So far, you're batting 1,000, right? Now we have a termination that creates a full reversal that gives odds favorable momentum. It's not even a 50-50. You have a clear path and a perfect entry, and it goes straight to your target. Once again, absolutely beautiful. Perfect trade, and that's the result that we expect. 50-50 trade, divergence prints, you cancel the trade. Beautiful. But then J Solar right before it, 50-50 trade with no divergence, and that one runs all the way to the trouble spot. So now, don't miss that one when your rules are met. Does that make sense? And you see this a lot on 50-50s. Here was the perfect trade. Everything about it was 100% rules met. And great job canceling your order when that divergence printed. But do you see how this one right here fit the rules? That's the one you made it? What do you mean? Did it continue down? You said that you canceled the trade. How could you have capitalized it on it if you canceled the trade? Did you break your rules but try to convince me that you didn't? 50-50 with divergence, and here's that ever-present. You were doing replay? Okay. J Solar, 50-50 from a good top, one divergence. You say all rules met but divergence. Except divergence. What's that saying? That's saying my rules aren't met, but I'm going to take the trade anyway. Language is important. All rules met except divergence, so to hell with it, I'm not going to listen to my checklist. No divergence, you know it's a no. And then right here it says if divergence, no trade. You took it anyway, and you got stopped out, right? Guys, this is the hardest part. You want to be in a trade so badly that you're willing to break your rules. But if you're not finding the success that you want by following your rules, how on earth are you going to start bending them? Someone give me that quote. You have to learn your rules like a maestro so you can break them like an artist or something. There it is again, 50-50 with divergence. Doesn't matter if divergence was here or not. No such thing as an okay top. Another 50-50 with broken rules. J Solar, let's be clear on the language once again. Another 50-50 with divergence that lost. That's two. Okay to enter when coming from a strong bottom and strong triggers exist. That's not a strong top. That's overrun. J Solar, why are you creating reasons to break your rules when you're not successful following the most basic, highest probability? That's two trades that divergence rule would have kept you out of, right? Two trades. That's two losers that are avoided by the checklist, but rather than follow the checklist, you're already amending it. You can do whatever you want, but I feel as though that's probably not going to serve you well. $50-50 trade, no divergence, stops in the wrong spot from a good top. Is there an after picture on that one? No. What kind of entry is this? Gap theory. So J Solar, once again. Now you're adding trades that fight direction. You're adding trades that fight momentum. You're adding trades. This has such a low chance of winning. And you're lucky that it did, because this 1-to-1 with divergence and only the small triggers through, and look at the multiple divergences going into it, you took a guess and you won on this one, right? So J Solar, that's your whole lineup. Followed rules, got paid. Broke rules, they took your money. Followed rules, got paid. Broke rules, or didn't take trade because the rules weren't met. Decided that the rules didn't matter, broke them, got run over. Once again, broke rules, got run over. Do you see the pattern? No divergence, medium probability trade didn't work. Or maybe it did, you put your stop in the wrong spot. So Jay Solar, we can ascertain from 7 pictures that when you follow your rules, you tend to win. And when you break your rules, it doesn't work out. Is that what you got from that, I hope? That's what I got from that. So you have in front of you a perfect recipe for success. You have in front of you a plan that you just proved to me wins more than it loses over the course of 7 pictures. Now imagine if that was 100 trades and you decided to take 40 of them with divergence, right? Then you come into these challenges. Safia termination condition creates the full reversal, gives odds favorable. You have a 50-50 look with divergence, and because of the strong triggers, it looks like you're taking it at the bottom of the window. And then Safia on NASDAQ, that first close on the correct side takes a lot of the stress out of it just in case all of this is going to hold. Great job letting it come back. Great job taking the bottom of the window. Nice trade. And then I like that you took profits at those trouble spots. Great trading, Safia. Jay Solar, did it all make sense when we went through it? In the moment, there's still anxiety. In the moment, there's still adrenaline. In the moment, there's still all these things. It was for me. And guys, I always talk from a level of where I was. But there's all this stuff in the moment that really made me make decisions that maybe weren't the best decisions. And I miss things in the moment as a brand new user. Maybe I miss a termination condition, or maybe I miss that the triggers didn't quite go through, or maybe I miss that my area was outside because I'm so excited trying to process everything. And that's why the repetition and simplicity makes it a little easier. Jay Solar, they don't. Do you want to know the truth? Damn it, I wasn't going to let everybody's cat out of the bag, but I'm just going to do it. Jay Solar, they get their asses kicked the exact same way you do. They don't have different markets. Your crude oil is their crude oil. Do you know what it is? Is they don't post it. They don't admit to getting their asses kicked trading against divergence on 50-50s because they're embarrassed. You, my friend, are willing to share it because you want to get better. It's always going to be a medium probability trade, and it's always going to be a medium probability trade with multiple issues. You can't change that, no matter how much you want to. And I know that that's a horrible, horrible way to think about it. I guarantee that 90% of the people that post in this room hide losers. I guarantee it. Because I look at their P&L, and PFI is not one of them, but when I see these monster killer trades and they're only up $85, I know that somewhere they're bullshitting me. This one went from 88.18 to 98, right? That's $400 worth of profit. Where the hell is the other 315? It's hidden behind smoke and mirrors to make me think that PFI is some sort of badass. No, PFI didn't do that. He shows me his losers. But Jay Solar, look at the people that are telling you how amazing they are, and then look at their P&L. They're hiding things because they're embarrassed to learn the lessons. Guys, you got to work through that. Show me the losers. In PFI, this is absolutely beautiful. This is a medium probability trade with a clear path coming from unbelievable just trend smashing, right? And you say, hell yeah. I'm taking this one inside of those synthetics, and I'm going to get out at fibs. And I love your exit, PFI. And if you're upset with $400 worth of profit, we got to talk. But Jay Solar, does that make sense? They're showing you the winners that work. They're not showing you the $315 of butt kicking. And PFI will. I got to stress that. PFI will show me his losers. And dag nabbit, PFI, you're getting better at everything you do because you show me the losers. Great job, guys. This is my favorite part of the day, is working with you guys and looking at your charts and talking about the advantages and, man, celebrating the great chart readings, celebrating the amazing entries, celebrating the victories. And then having the conversation when maybe there were challenges. Ziba, everything says down, your path is clear, you enter the market and you exit before it's a problem. Ziba, this is a beautiful way to take this trade. The path is clear, the trend is down, everything says go, smalls are outside of the large. Ziba, beautiful trading. Paul, try this. Go through and do the cash and tick. You know how to do that, right? Go through and do the temp folder. You know how to do that. But when you go back and do the workspaces, Paul, get rid of the recovery, but get rid of the workspaces as well. Because it may be pulling from that corrupted little area. Try that. This worked for me yesterday. I had big problems with Ninja, and I went through, and when I did that full thing and I got rid of the workspaces too, I was able to get back up. Mine was locking up. So maybe that'll help get you where you need to be. I hope. Fingers crossed. In temp, everything. Get rid of everything in the temp folder. From top to bottom, get rid of all of it. Great trade, Ziba. And then PFI, I love it. Is it okay what I did? Did you not hear me sing your praises? Or do you just need a little positive reinforcement today? It was amazing. It was an amazing trade. It was a medium probability trade, but you're in a strong trending market. The path is down. Everything's clear. And notice that when price pulls back to resistance, all the triggers are below it. I love this one. It's super low risk. And then you made an intelligent decision at Fibonacci support with weak triggers. Who cares if it blows through? Great trade, PFI. And that's $400. And if you're not comfortable with a $400 trade, man. Rakesh, are you in here? This is a great question. Can we consider odds favorable momentum? Man, I like these questions a lot. Rakesh says yes. Jay Solar says not yet. I'm not going to take sides because I love you all equally. What I'm going to do is I'm going to go to my odds favorable momentum look. And odds favorable momentum means that both triggers are up and wide. It means that the small triggers are above the large, but the large are wide. They're angled in the direction of the trend. So in order to have odds favorable momentum, Rakesh, the only way I can have odds favorable momentum is for both trigger lines to be wide and strong in the direction of the trend. So when you ask me, is that odds favorable momentum? I have to respectfully say no, sir, because my large triggers are still down. What I have is a little bit of overrun at a fib. My trend is changing, but my large triggers are down. And I'm kind of in a little transition period right here. Does that make sense? The smalls are up, suggesting that maybe this area is going to hold, but I don't have the momentum yet because my large triggers are still down. And then if we go back to crude oil at that 9 a.m. time, here it is right here. It never gets that odds favorable momentum, and it actually comes back and retests the area because those large never rolled. And then ultimately, everything goes in the direction of the trade. Absolutely. So those triggers have to be strong. That's an awesome question. And I hope that made sense. I hope that answer worked out and got you what you needed on that one. I try to keep it so black and white in the beginning, guys. I try to keep it without a lot of room. There's Gary's checklist, sharing it. Jose trades. Not a ton of momentum, right? But it's smalls have returned to the large. So there's not really that space between there. And then we're losing momentum a little bit as well. Awesome, Kay. I can't wait to see it. Jose says because everything is down, because the path is clear, because the momentum isn't horrible, but it's not great. He goes, I'll use a mid-band. And then you managed it beautifully because you recognize that things weren't doing what they needed to do. And then there's that third divergence. Perfect exit, Jose. Really well done on that. If you're going to take those trades and break your rules on the entries, you have to be willing to manage them, right? And I think you did that perfectly. Nice job. And then Gary, if not perfect on the NASDAQ, don't take a 50-50. Bad bottom, 50-50. That's the one that we talked about in class. Great job. You guys are killing it. Moon, are you going to show me one of those momentum trades? Yeah, you are. Termination, full reversal, odds favorable. Wait for it to break. Moon, you have found your path, my friend. $200 on one contract. You did it on a 10 lot. That's $2,000, Moon. Was there a previous trade? I'll take a look. If I missed it. Sorry if I missed it. Moon, Rockstar, inconsistent. You're showing me the same pictures every time. Jose. I'm looking. Did a lot of talking this morning. That's the one that I missed. I got you. I know why you wanted me to see this one. Odds favorable momentum, 50-50, no divergence, right back to the large. You're saying with all of this momentum, giddy up. Boom, boom. Nice, Jose. Yeah, I wanted that one to be seen too. That was perfect. It's just taking advantage of momentum, right? It's not the best look, split triggers, but because of no divergence, because of strong triggers. And Jose, check it out. You took it right back to Fibonacci support. Way to respect that big chart. Nice one. I really do get excited when you guys do well. I really do. Can you go over the momentum trade here? There wasn't one. Yeah, but there wasn't an entry. All the trigger lines are still down? No. Why, PFI? So that you can confuse yourself? You said 50-50s were too advanced. Why the hell do you want this one? With all the momentum, let the bottom of the bar clear the trouble spot. With bars outside of strong triggers, take a nibble. There you go. Now go practice it 1,000 times. Like Ron did. That's all it is. But let's break it down even more. So PFI, we had a termination, right? Beautiful. We had odds favorable momentum. We had a clear path. Isn't that just high probability trend trade stuff? Isn't that the stuff that you should be able to recognize at a moment's notice? Absolutely it is. So when I have odds favorable momentum, when I have a clear path, you start adding other things, guys. And this is what Moon did a week in. It never pulled back. Clear the one-to-ones. Take $100 and don't be greedy. That's not your money. PFI, you jumping into the market is running into the bank saying, give me all the money, and getting tased and hogtied. You having a clear plan that's been proven to work more than it loses, that's you asking for your money, right? That may not be your money yet, but do this. Every time you see a runaway, I want you to ask yourself, did the bottom of the bar clear it? Were the bars outside of the small triggers? Did I have an opportunity for 10 ticks, for $100 worth of profit? So now while you focus on your high probability trend trades, while you focus on the best 50-50 trades, take those pictures. Let the bars clear the trouble. Odds favorable, right? Start taking pictures and start formulating a plan where you get in, where you get out. Make sure that it's repeatable. Post them in the room and we'll work together on it. But guys, when you want to jump outside of what I teach, you have to tell me your rules. You have to tell me why you're doing. I'm not going to create a set of rules for a trade that I don't teach. That's not fair to me. That's your job as a trader. Jeremy P, termination, full reversal, odds favorable momentum, no divergence, perfect entry. Jeremy, I live and die by this setup. Live and die. And the stop placement's perfect. Jeremy, I hope that paid you. If it didn't, I hope you're okay with the fact that you took the perfect trade. Jay Solar, good top, flat triggers, small through, with divergence. Expect a target gap bounce. I don't even know what that means. Jay Solar, will you do me a favor? This sounds horrible. And guys, this is for everybody. If you're going to break the rules, don't bother putting your checklist on there. If you're not going to follow the checklist, guys, don't put it on the chart for me to look at and have to go through and say, hey, your large triggers are flat. Your small triggers at the time of this pullback probably didn't even make it through the area. You don't have areas inside of favorable large triggers. You're jumping in arbitrarily. Strong momentum forming. That means that it's not there, right? Small triggers didn't make it through the area. That means that there's a termination condition. Divergence. And if you are following your rules, how on earth? You said that the triggers were forming, but they're not there, right? And you don't have any areas, Jay Solar. You can take any trade you want. But if you come to me and you say, I'm having problems, and then you show me this picture, I'm going to suggest that even though this one won, you jumping outside of what's repeatable and proven might be a challenge for long-term success. But again, respectfully, you're allowed to do whatever you want to do. The same way I'm going to tell Safia, trading directly into one-to-ones with absolutely no trigger lines through it and no areas inside. Safia, what trade is this, right? You said it's a trend trade, but rule number 2 says don't take it. Trend trade has areas inside of favorable large triggers. Don't be sorry. Just accept. Accept that it's not a trend trade. It's a termination. It creates a full reversal. It has odds favorable. It's right into a termination condition. There's no areas inside of favorable large triggers, right? Here you're jumping in against strong triggers, trying to justify it as a momentum trade. I don't disagree with the trade, but don't call it a trend trade, right? It's not. It's directly into a termination conditions with the smalls inside the large with no areas inside. And there's a lot of challenges. And how many times are these one-to-ones going to hold and mess up your day, right? And that's what I don't want to have happen. And then if we go to the other side of it, Safia, it's a termination that creates a full reversal that gives odds favorable. Every trigger is green and up, and from your point of entry on the retracement to the large triggers, you have a full bar back to the small triggers on the NASDAQ, which means if nothing else, it creates a manageable trade back up to that area. So there's a lot of victories in it, but don't confuse it. Jay Solar, I have a different set of rules than you. I also have 3 years of experience. I have 9,000 pictures. I'm very clear about everything. It can be applicable. And you know what? I apologize, Jay Solar. I'm not suggesting that you can't break your rules. You can. That's fine. Break your rules. I will no longer point out when rules are broken. But make sure that you're very clear on every rule that you followed or didn't follow, and I'll hold you accountable to what you type on the chart. Safia, we saw this one already. Termination, full reversal, it's a 50-50. Because of the divergence, you take it from the bottom of the window, and then you don't get greedy. Great management. Odds favorable momentum. It's a 50-50 trade. I like that you called it a momentum trade. So you hop in when it clears, and you hop out at the trouble, and when momentum. Beautiful. Great execution, Safia. Jose trades every time. Every time I take this trade, everything says up, beautiful area, no divergence. Every time I take this trade, the only challenge that you had is that you're not coming from a strong bottom, which means that that mid band has the potential Notice how this divergence broke, all the triggers got below it, Jose. And this may be one of those in the moment things. This divergence broke, which means it's out of play. Are you with me in here? You might be in a trade. I hope you're not in a trade. Guys, this divergence low broke. And since it broke, we're starting over, right? So we have one divergence, but it's not from an area. So we do have that bad bottom. It's not a good bottom. It's just a loss of momentum. And when I get a loss of momentum that's not from a termination, that mid band becomes my first area, that first potential target spot. And I think that you handled it beautifully. I think that you took a trade. The advantages were there. It just didn't work out for you. But I mean, everything supported this trade. I just wanted to talk about, because this broke, it's technically not a pivot stop out. Both triggers getting below the area, call it broken. And since we didn't come from here, it's just a pivot, but you had all the advantages. Does that make sense? And that's just a language thing. That's just talking about good tops and good bottoms and making sure that the clarity is there. And then that's a textbook termination condition. Let's see. Odds favorable momentum. PFI. You got bored. Pedro, let me go through this one, then I got you. Give me 2 seconds. Price reaches resistance. Absolutely no trigger lines break through. Oh, thank you, Jeremy. And Pedro, Jeremy just gave you the answer. Right-click on your chart and go to Data Series. Well, shoot, now I have to do it. Scroll all the way to the bottom, and you'll see text markers. Plot trades. All right, PFI, are you in the room? Everything's up, everything's up, everything's up, and then it reaches resistance and absolutely no trigger lines break through. That's a termination condition, and it tells you don't do it, right? Notice how your small triggers have come back to the large triggers. Compare that look to this look. So we're losing momentum as we come in too. Guys, that's the deep pockets dudes recognizing that we're coming to a stopping point. You see that momentum. And then when you take your entry, it's just coming off of that termination condition, and it gave you a chance to recognize the error of your ways. So rule number 2 got you on that one, PFI, right into that termination condition. And this is where I sarcastically and lovingly say that if you would have looked at yesterday's trades this morning, you would have seen a couple termination conditions, and you might have had that on your brain or on a piece of paper in front of you. Don't trade into them, right? Great picture, though. Awesome picture, great lesson. Man, every day, PFI, we're going to learn something. Guys, I learn something every day. I'm not done learning. And you want to know the truth? Is some days I'm going to screw it up. Guys, same thing. Gary, same trade. It's a pivot from nowhere. Everything goes up. Perfect entry. You just got low ticked. Sometimes the market's a butthead. John in Alaska, same trade, right? John in Alaska, you got scared. You thought it was going without you. And man, you turned that little loser into a big one. So John in Alaska, Jose, Gary, everybody, this is a great trade. It just didn't work. They low ticked you and then headed the other direction. But John in Alaska, this is why we don't chase, man. This is why we wait for that pullback. Because you turned a 2-point loser into a 5-point loser with that fear of missing out. It's okay, though. Great picture. Thank you for sharing it. Man, we've all been there. That's how I recognized it so quickly. I was like, that looks like me when I started. And that's normal. Your brain's going to tell you, get in, get in, get in, get in. Don't miss the money. Don't miss the money. And then once you have that faith and trust in the rules, what you're going to get is the ability to kind of relax. Jose, it's a perfect medium probability trade, or it's the gap theory in play. And there's the gap, right? So you caught it after the fact. And that's okay, Jose. Guys, the gap theory, when the large triggers don't follow, I like that you recognized it, though. And that's a beautiful top. And if those large triggers were further down, I would have been with you 100% on that trade. But the gap theory said, just hit the brakes and be calm. Wait a little bit. Let's see what happens. It's a good look, a tiny nuance to keep you out of that one next time. And then Jeremy, there's that termination. There's everything says up. There's the perfect entry. What happened? The HVA line printed, so you got out? Whew. Man. So with a termination condition that creates a full reversal, no, it wasn't. That's okay. Mid-band. So guys, when is the mid-band a termination condition? And Jeremy, I think that this one would have changed your whole mindset on this one. The mid-band, large sharp mid-band is a termination condition if the large triggers are a full bar away. If that gap theory, like Jose had here, if they're a full bar away, this is a termination condition. Jeremy, you had the luxury. They weren't even close to a full bar away, right? Everything was up. Your window of opportunity was amazing. There was no divergence. We're coming from a great bottom. And then what you did is what a lot of people do when they try to add charts, is you let one line scare you out of a trade, right? And Jeremy, if that one line was maybe right here, it becomes a great management point. But at this point, you're already in the best trade possible. If you have maybe 3 points to get back to an HVA line against you, it becomes a great way to manage. But if it's already beneath you, below you, don't worry about it, right? And you had odds favorable momentum. But I want you to see this. Without that noise, is there anything that would have made you exit that trade? Without that 8 range, nothing, right? And this just is going back. And Jeremy, I know that you're a little more advanced. Sometimes keeping it simple, guys. Sometimes keeping it on one chart or 2 charts. Sometimes less is more. I love a range chart. I use range charts. But you had odds favorable momentum on your range chart. And that, for me, just adds fuel. Okay, this was your first trade, really? Termination, full reversal, odds favorable, no termination conditions, pull back to support inside of favorable large triggers, and you got paid all the way up to Fibonacci resistance? Who is Kay? That's amazing. That was your first trade from Friday? Is that you, Cam? That's your youngest son? You're doing a good job with him. How did he feel about it? Where's he at? Kay, talk to me here. First of all, congratulations on your first trade. Second of all, congratulations on having advantage. Third of all, this is beautiful. I'm going to steal it. And you can't stop me because I control the room. Guys, that is everything that we look for to be successful. Everything. So Kay, welcome to Nexgen. Welcome to trading. Welcome to rules following. I'm going to steal your picture because I want to be able to take trades like you take trades. You are forever immortalized in the spreadsheet. That's the one, right? All right, Kay, I'm going to beat you up. Are you ready? Just because it's your first trade, I'm going to have a little fun with you. What you're going to find as you grow and you begin to trust a little more is that when this market is coming down to the area inside of favorable large triggers, you can literally have a limit order waiting right there. And this is an amazing trade. But by doing that, by developing that trust and getting in on the way down, you reduce your risk. But the cool part is you also get a little more out of that trade as you head up to that next trouble spot. Beautiful trade. And if that's the only thing that I can coach on, holy smokes. Absolutely amazing. I love it. And it's simple. Oh, and Jeremy P., we saw that one. And then Ron Donald, this was your first trade on Monday. Everything's set up. Hadn't reached the trouble spot yet. Pull back to the area inside of favorable large triggers. Money money. Ron, perfect. Repeat that process every day. Every day. All right, scrolling down. And Jay Solar, I apologize if I felt like I was coming at you. One of my biggest, and I'm going to say frustrations because I'm human, and it's not you. It's everybody that wants to be winning, right? That wants to win more than they lose. And they tell me, I'm going to follow rules, I'm going to follow rules, I'm going to follow rules. And then I'm okay with you guys breaking rules. I'm okay with you guys changing your plan. What's difficult for me, though, is to watch people tell me that they're not having success and then start rewriting the plan, right? I'm not having success with what's been proven to work, so I'm going to start creating exceptions to the rules so that I can be in more trades. And that's what I notice. And usually we don't do it consciously. Usually it just kind of happens. It's a byproduct. Your brain starts telling you, get into a trade. And Jay Solar, my brain still tells me to get into stupid trades. I took a stupid trade this morning. I formed an opinion. And because I formed that opinion, I got killed instantly on that trade. And it just kind of reinforces the idea that I need to stay focused on the best of the best all the time. And guys, everybody's going to make mistakes and everybody's going to have challenges and everybody is going to go outside of their rules. And what you're going to find is that the more you focus on rules, the more you dedicate yourself to being pragmatic about everything that you do, the easier it becomes to be consistent. The easier it becomes to have an advantage every time you take a trade. And Jay Solar, it's not unique to you. It's everyone in this room. If you're not winning more than you're losing, stop trying to alter the plan. Learn the plan, get your numbers up, get consistent, and then as you're executing the plan over and over, get to the point to where you can add to that plan if you feel you need to. But I'm telling you guys right now, if I'm making $500 a day per contract on high probability trend trades, I don't have any desire to alter my plan. I have a desire to alter the number of contracts that I trade. Jay Solar, I try to praise everything and point out the issues, right? When my brother posts trades in here, my brother does the craziest, from an educational standpoint, he gives me heartburn on the daily when he posts the trades that he takes. So I'm going to say that one more time. My brother, John Novak, the owner of Nexgen, the guy that wrote the software, takes trades that make my hair fall out, that gives me wrinkles, it turns what's left gray, and it gives me heartburn. Shogun, I think that sounds like an opinion, and opinions are expensive. How do you like that? I don't even have to look at the chart. So Jay Solar, what I have to do, and I'm telling you right now, it's difficult for me, because I talk to my brother on Skype all morning when we're trading, is I have to tune him out, and I have to tune out what he's doing, and I have to be okay missing the trades that he's taking, because I have to stick to my plan, because my plan has been proven to bring me success. So if Ron jumps into a trade, I know that that's Ron's plan. If you take a 50-50 with divergence, I know that that's not part of your plan yet, right? If my checklist is your checklist, I know that that's not part of your plan yet. So even if it works, I'm obligated to hold you accountable to the plan that you present me. Does that make sense? And then Jay Solar, if you send me an email one day and you go, hey, Mark, I've studied these 50-50 trades, and what I found is that if there's a good top or bottom and strong triggers on the small chart and one divergence, I have changed my plan to be okay taking that entry. Or you may tell me that if it's not from a good top or bottom and there's no divergence in strong triggers, and you tell me, hey, Mark, I've altered my plan to include an entry for this. Then, Jay Solar, I'll hold you accountable to that, and I'll say, hey, you weren't coming from a good top, but I noticed that you didn't have divergence, so I understand why you took this trade. It's still a medium probability trade, and this may be why it didn't work out, because it's not high probability. Some of these are going to lose. But then what we've done, Jay Solar, is we've created a plan that's 100% in line, right? We've created a plan, you've created a plan that is repeatable, you've created a plan that is recordable, and I'm looking for one of your trades with the chart on it. But you've created a plan that if you ever check no, you are instantly in violation of the trust that you created with yourself. If you ever mark no, and this is your checklist to get into the trade, then you violated that trust with yourself. So I need to see a new checklist so that I can hold you accountable, right? Or I need to see something on there. Yeah. When coming from a strong bottom and strong triggers exist. Well, that's not coming from a strong bottom, is it? It's coming from a strong top. But it's not really a strong top. That strong top on the 50-50 was good for this 50-50 right here, right? This got you through this area and pushed down. All the way down here, I am 15 points away from that strong top. It's already gone through, and I have 2 areas that haven't broken. And that says 1 area not broken. So I'm not going to argue semantics, and I'm going to support you every trade that you take, right? And I'm going to celebrate the victories. But if I know that your plan is XYZ, I'm going to hold you accountable to XYZ. And if you don't want to be held accountable to that, well, then you have to change your plan and let me know that you did, right? But don't show me a checklist for entry with a no on it and then type in below it, well, I broke my rules because. Show me a checklist that has that as part of the checklist. There is no why, there is no no, right? And guys, we'll do this together, but you have to hold yourself accountable for me to hold you accountable. Sorry, PFI, thank you for that. Termination, lower divergence, smalls below the large, no divergence, area inside of favorable large triggers. PFI, good trade, rules-based trade, solid trade. Tell me the challenge that you saw with it, because I don't see one. Would you take it again? So at the time of the entry, you're right. The triggers weren't compressed. The triggers were breaking out from the large, but there's no separation, right? So if there's no separation, then the momentum might be not exactly what we want, but the path is clear. Everything says down. So when you have momentum forming, but it's not really there, can't we go to a smaller, faster chart and go, well, let's just take a look. Man, I've got odds favorable momentum, and I've got no divergence, no slowdown, and I've still got the beautiful area. And the only thing that I can say on this one, PFI, is that one line inside of favorable large triggers is where the market is likely to bounce. And if the momentum isn't perfect on the 13.2 on your large chart, couldn't we just put a quick little stop right above it? Because if it doesn't bounce, because we know that the momentum's waning a little bit, we'll get out of it. We'll wait for the next best. Great trade. I love it. I love everything about it. Nice job. And then Rakesh, let's see what we have. Odds favorable momentum directly into a termination condition, not from a good bottom, right? You take an entry, not inside of favorable large triggers. You've already had 2 divergences against you. There's your third divergence against you. Small's below the large. Synthetics are all the way down here. Rakesh, I'm not 100% sure what kind of trade this is. Rule number 2 is not met. But let's talk about the positives and the things that we can do. Rakesh, when you have this much momentum, right? But you're trading directly into a termination condition, let it sort out. Let it decide what it's going to do. Synthetics, Pedro, when we talk about on your smaller, faster chart, there's 2 trigger lines. These smooth trigger lines are the large trigger lines that are native to the 5-1 chart. Those are your small chart, large triggers. In your synthetics, these stepped ones right here, these synthetics are actually the large triggers on this chart. So when these two work together, one on top of the other, they create what we call favorable large triggers, and they create a small window of opportunity. That's the smallest point where the market is likely to continue. Does that make sense? Good question. Very good question. Awesome, PFI. Absolutely. And let me show you my picture, Pedro. When I talk about favorable large triggers, oops. I've got a million pictures, guys. I hope you do too. When I talk about favorable large triggers, let me get that out of the way. You guys don't need to see all that clicking. Let me give you the picture. When they are overlapped, one on top of the other, wide angled in the direction of the trend, that's your best look. That means that both charts are cranking in the direction. And then on that smaller, faster chart, when I have an area inside of them, it gives it a bounce point. It's like a brick wall for the market to bounce off of. Good question. Rakesh, are you with me? So there's a lot going on in this chart, but a little patience piece, Rakesh, is if you're gonna trade into the termination condition and the large triggers are way down here, looking for them to come back, right? That you're gonna get a bounce off of a fib more often than not. It kind of keeps you focused in that patience piece. And then when everything's kind of up, down, up, down, up, down, up, down, up, down, we're not exactly sure what's going to happen there. So letting everything kind of roll just creates an opportunity. It's a good look with direction. It's a good look with momentum. But because of this area, that's what's creating all of this, like, it's like a seismograph. It's like up, down, up, down, up, down. That's buyers and sellers just absolutely duking it out, trying to decide who's going to win at the termination condition. So let it calm down a little bit. Let it all agree. And I think you did a good job with that. I think that you kind of let it go through. The small triggers start rolling, and then you take your entry to go. So great patience on not getting caught right off of it, letting it work itself out, letting the small triggers roll a little bit, and then understanding that this line can very much be a problem spot. So it's okay to take quick profits, right? To reduce your risk as you come into that challenge. Nice job, Rakesh. And then there's that 50-50 trade. Smalls below. And then Rakesh, once again, see how those large triggers are so far away? There's that reaction. But it hasn't closed the gap to those large triggers yet. Did this one go up and hit your stop right at the large triggers? Yep. That's that pattern that we can recognize. When the large triggers are above the reversal bar marker and that mid band is reached, let it close the gap before you make any decisions. That's the gap theory. And I'm telling you, guys, this will pull 5 or 6 losers out of your trading almost every day by just letting it close the gap, letting it get up there, and letting price correct itself on the way down. And those big split triggers are a great indication that that's probably what it's going to do. And these strong small triggers. Gap theory. If price pulls away from the synthetic triggers, the large triggers on your large chart, too fast and too far into a Fibonacci area, it snaps back. So this is your look here. Price accelerates all the way to that mid band. The large triggers are a full bar away. Any shorts between the bottom of this bar and those large triggers typically get run over. Price reaches Fibonacci resistance. The large triggers are a full bar away. Any longs between the top of that bar and these large triggers typically gets run over. Straight into resistance, even with odds favorable momentum. When those large triggers remain below the reversal bar marker, any longs right here typically get run over as it corrects itself. Any shorts before it closes the gap typically get run over. So Rakesh, that's your gap theory. And all it is it's a little safeguard that says be a little patient. Those large triggers are so far away. Let them close the gap and then I'll make a decision. Does that make sense? Awesome question. And that's just a pattern, right? It's not necessarily an entry. It's not necessarily an exit. It's just an opportunity for you to create expectations. Great question. Great lesson. Now we just have to repeat those lessons over and over. Seems like a 50-50 rules breakdown when there are two fibs. Gary, how about the fact that the small triggers just didn't even make it? And divergence prints. That's a rough look. And yeah, there's two areas that haven't broken and your small triggers really haven't even, that second one hasn't even popped out. That's a tough look. Awesome. Ron, I had a chili dog last night. Reminded me of you. You too, Safia. Rakesh, I'm going to address that. Let me look at George's trade real quick. Whoops. There we go. George, everything says down from a pivot stop out. You take the entry at resistance, tight little stop, and then you take the higher window and make money on the way down. It's a nice trade. First one didn't really work out, wasn't really in the triggers, and it made it right back to resistance inside of favorable large triggers like it typically does. And Rakesh, I think that I just had a breakthrough that's going to help you, and I hope that this is helpful. And guys, I just realized that it's noon. That's okay. Let's do this real quick. So when the trend is down, the green bar creates your opportunity. I don't even have the chart, Jude. I don't even open up. I don't even open up gold. If you want to show me a picture, I would love to talk through it. But I don't even have gold open. All right, Rakesh. We're about to change your world. I'm excited about this. All right, so I'm going to pull up just some pictures that I have. Let me find it in a downtrend. And Rakesh, hopefully I'm reading it correct. Okay. So we're in a downtrend. The large chart says down. The large chart says momentum. Everything says go, right? So Rakesh, the up bar, the reversal bar, the green bar, isn't the opportunity to enter the trade. My wife did the same thing. This is amazing. So Rakesh, rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And a pullback is nothing more. This is your pullback. It's a small retracement in price. Let me make that so that you can see it. The pullback is a small retracement in price that's counter to the overall trend. Does that make sense, Rakesh? Awesome. So what we're doing is that this first reversal bar right here, we're not entering the trade. We're not looking to enter the market. What we're doing is we're finding the area where the market is most likely to continue. We're creating a window of opportunity, and your window of opportunity extends from the highest point of the triggers to the lowest point of the triggers. But trades originate at the areas. So we're looking for the areas that are inside of those favorable large triggers. So the green bar has us looking for where we're going to enter, but it's the area inside of the favorable large triggers where we're actually going to pull the trigger, Rakesh. And what that does is it minimizes risk and it makes it easier, gives us more room to get back to that next target area. When I was trying to teach my wife to trade, and that's why I think this one clicked, is she was entering right there because she saw the reversal bar. She goes, oh, reversal bar, get in the market. And then she got in the market and she kept getting run over as it pulled back to the area inside of favorable large triggers. So I think maybe that'll be a little helpful. And this kind of defines all the different things, right? So when we talk about the area, Pedro, inside of favorable large triggers, it can be a fib, it can be a mid band, or it can be yellow 1-to-1s. And if those are separated, well, then sometimes the window can be a little bit bigger. You see in this trade, there is one line inside of favorable large triggers, and it's just a mid band. There's resistance up here. There's 1-to-1s up here, but they're not in the large triggers, so they're outside. They're not a part of where the market is likely to continue. Here we have both the mid band as well as 1-to-1s. So that window gets a little bit bigger from the highest point of support to the lowest point of support. Does that make sense? Rakesh, does that help out? Everything says up. That red bar doesn't mean get in. The red bar means identify the areas inside of favorable large triggers, and this is where your trade is going to originate. Can I get a Y from you, Rakesh, if that makes sense? Pedro, does that clear it up a little bit for you? Let me share these pictures with you guys. All right, and I haven't forgotten about you, Jude. Don't worry. I'm going to get you. All right, Rakesh. Odds favorable momentum. Do you see it? No termination conditions. It hasn't reached the area yet. You're comfortable with that. Is everybody comfortable with that? This is rules 1 and 2 being met. Odds favorable momentum and no termination conditions. Are you comfortable with that side of it, Rakesh? Okay. And this is the look on the other chart, right? You know you're looking for a trade, but now we're going to define where it comes from. So Rakesh, everything's going up on this chart. It's going up. It's going up. Everything is accelerating up with the momentum. And then we get this red bar. So at the time of this red bar, Rakesh, I want you to do this. Get in the habit. Look from the top of your triggers to the bottom of your triggers. Visually, you can draw a box, whatever, draw a circle. And then the area where we're looking for the high probability trend trade is from the highest point of support to the lowest point of support, fibs, midbands, or 1-to-1s, inside of favorable large triggers. Which means that in order to enter this trade, The market has to pull back to this highest point of support inside of favorable large triggers. Because this fib is outside of the large triggers, it's not a part of that window. It's not one of those points where we're expecting a bounce. Does that make sense? So we're refining our entry point using the small chart to that point where it's most likely to continue. So Rakesh, we can put a limit order couple ticks above that mid band, and if it pulls back, then we'll get into the market. In this particular instance, it didn't make it to the area of support inside of favorable large triggers, which means that it simply wasn't our trade. But by doing this, Rakesh, it's going to help you minimize risk. It's going to help you maximize profit potential. It's going to get you in at the most likely bounce point and give you the highest chance of success, the statistical advantage. And you can practice that look over and over by just looking for the rules to be met. And look how often it comes back to those areas inside. Does that help a little bit? And this is a 50-50 trade, and this had divergence, and most of you aren't going to take it because it doesn't fit the checklist. And some of you will take it because it's a part of your plan. All right, this is gold, Jude. You want to go through it together? This is what I see, and I know it's probably too late. The first thing that I noticed, Jude, hey, Bobby, take care. Thank you for being here, is that we're in a downtrend, right? The background is red. Give me a Y if you're with me. Awesome. The next thing I notice is that I have odds favorable momentum. The small triggers are below the large. The large are wide. They're angled in the direction of the trend. I have tons of momentum. The first thing that I look for every time in a trade. And then I also notice that my small triggers have smashed through this potential trouble spot, but my large triggers remain above, which means that this area's got a chance to break, but it might not because the large triggers haven't gone through. It has the potential, but it isn't broken yet. So I know that if I'm going to take a trade, I have one of those 50-50 looks, right? And then when I come back to this chart, I have strong triggers and I have a divergence, which tells me that the likelihood of the 50-50 working goes down a little bit, but it does pull straight back to triggers inside of favorable large triggers, or a mid band right inside. If I take the entry here, this second divergence says that things are slowing down, which means that this area may ultimately hold. I'm still not sure. I'm probably exiting the trade. 3 divergences in the same location is what I consider a termination condition. It may push the market up beyond where I can manage this trade properly. So for me, this would be a definite exit. And then if this termination isn't going to hold, if this area is going to break, you're going to see this happen. Your smalls are going to crank down. They're going to get through these areas, and we'll look for another opportunity just a little bit lower to continue with the trend. So for me, from that highest probability trend trade checklist, that medium probability entry, there was no trade to be taken. But everything suggests that that market's likely to continue down, so I start playing the if-then game. If this market continues down and it gives me a no divergent strong trigger pullback to an area inside of favorable large triggers, I'm going to look for opportunities to enter the trade. Yeah. And Jude, it's so important that you recognize the idea that you're brand new, right? Jay Solar, my apologies about your sore ass. I promise it comes from a place of love. So Jude, keep posting these pictures, but do me a favor. Start writing on there all the things that you see, and then we'll talk about your ability to read the charts. And what you'll find is every day, it'll get a little bit better over and over. Great job. All right, last one, guys. I've got to go be a day trader too. J Solar, termination creates a full reversal. Full reversal creates odds favorable. Odds favorable gives me, it looks like we're coming up, not quite a clear path. It is a 50-50, right? But then you have one divergence and everything is screaming and it's minimal risk. And I noticed you didn't write any rules on this one. You say it was a lucky trade because of the divergence on the 5-1. But this is why you were thinking when there's a strong top, strong bottom, odds favorable momentum, divergence trades work. I'm not telling you to stop doing them. But Jay Solar, remember when I told you that you may get to the point where it's one or the other? If you're coming from a strong bottom, your plan may say, I'm okay with one divergence and strong triggers. Or if I'm not coming from a strong bottom, I'm not okay with one divergence. And that's all it is, Jay Solar, is it's a progression. My personal trading plan, if I'm coming from a strong top or bottom, I'll trade against one divergence. Two divergences takes me out of the trade. But what you'll find is you'll see this over and over. And the part that escapes people is the unwillingness to accept that this trade is less likely to win. And then when it loses, they get pissed off. The market doesn't care about your feelings. Does that make sense, Jay Solar? Because of the strong bottom, because of the strength, because of the direction, I don't disagree with your entry. So what you need to do, Jay Solar, is you need to take your 50-50 checklist, right? Is you need to take that 50-50 checklist and you need to put the one that's appropriate, or you need to change no divergence on the 5-1. And you need to put strong bottom, one divergence, take trade. Weak bottom, or no divergence, take trade, right? Just adjust it so that you can be consistent. And I think that's the biggest thing that I'm trying to relay here, is have rules. Dr. P, please, this is going to get back to John. Let me shut off the YouTube recorder real quick.